Committee will come to order. Without objection, the chair is authorized to declare recess of the committee at any time. Without objection, the chair will recognize himself, then the ranking member, each for 5 minutes for purposes of making an opening statement, but with any luck, the chairman won't use his entire 5 minutes. Today, I need not remind members yet again, we have tens of millions of our fellow countrymen who awoke today. They had no job to go to. Others are underemployed, making less than what they once made, wondering when a good economy will return and when they themselves will be able to have greater economic opportunity. We know that we have a historically high number of our fellow citizens dependent upon food stamps. We have the lowest workforce participation rate in at least a generation or more. Economic opportunity and job growth still should be job number one of this committee. Hopefully that is one thing we could both agree on, is that this economy could be doing better. We believe, particularly on this side of the aisle, that no matter how well-intentioned regulation may be, the cumulative impact can slow down economic growth, can slow down job opportunities. We've had countless witnesses sit at that table right there and tell us the very same thing. As one community banker from my native Texas said, quote, "I will tell you my major risk is not credit risk, risk of theft, risk of some robber coming in with a gun in my office. My number one risk is federal regulatory risk." And that's why it is imperative that this committee not look at the purported benefits of rulemaking, but look at the actual benefits and then weigh that against the actual cost, which is another way of simply asking the question, what impact will this regulation have on the economic opportunity of low and moderate income Americans? So far, the committee has passed 38 different regulatory relief bills that will hopefully lead to smarter regulation and greater economic growth. 20 of them have passed the House, many with bipartisan support. We hope to add at least 5 more to that list today. We look forward to the Senate. Well, we actually look forward to the Senate doing anything, but we would particularly look forward to the Senate taking up some of this legislation. So again, we will have a number of regulatory relief bills. We will also have the Federal Reserve Accountability and Transparency Act. We've had a full legislative hearing on this. Then we had the Humphrey Hawkins testimony, so I know that members are well familiar with this piece of legislation, very familiar with the debate. At the end of the day, I believe this is about accountability and about transparency, and it's not theory, history. History shows us that when the Fed will let the rest of us know, job creators, entrepreneurs, small business people, know exactly how monetary policy will be conducted, the economy performs better and more people get to go to work. In addition, the gentleman from New Mexico, Mr. Pierce, has been a real leader on a bill to reauthorize NAHASDA, and we look forward to having that piece of legislation taken care in this committee as well. Again, job number one will continue to be the creation of jobs and economic growth in this committee. These bills are designed to ensure just that. Look forward to the markup. Now yield to the ranking member.
Thank you, Mr. Chairman. Today we consider 6 measures related to Federal Reserve, Dodd-Frank, housing, and financial institutions. Mr. Chairman, this will be the last committee markup before we go into a 5-week congressional recess. But our work here is far from complete. I'm not pleased that as we prepare to depart, 2 important matters that fall under this committee's jurisdiction the Terrorism Risk Insurance Act, and the renewal of the Export-Import Bank's charter remained unresolved. And I'm really disappointed that months of inaction and disagreements within the Republican Party has created uncertainty for businesses, workers, and our economy as a whole. On September 30th, the Export-Import Bank's charter will expire, shuttering an institution that creates or sustains hundreds of thousands of jobs over the last 5 years and has supported $233 billion in U.S. exports. Only last month did this committee have its first hearing on the bank's 2014 reauthorization, and it's not clear there will be any more in the future. One thing that was clear from last month's hearing, however, is that many Republicans on this committee support renewing the bank's charter. I was pleased to hear so many speak eloquently about XM's positive impact on job creation, economic growth, and competitiveness for businesses in their districts. Mr. Chairman, when we return in September, there will be just 10 legislative days left before the bank's charter expires. Failing to renew it could deal a significant blow to our economy and have a detrimental impact on the thousands of American companies trying to compete against businesses in China, Russia, Korea, and countless other countries across Europe, all of which have their own version of the XM Bank. The second piece of unfinished business is the renewal of the Terrorism Risk Insurance Act, created following the 9/11 attacks. TRIA is critically important to ensure terrorism insurance remains available and affordable, and it too has fostered continued economic development across the U.S., creating jobs and growing the economy. Like with XM, TRIA is one of those rare programs supported by Democrats and Republicans, as well as a wide array of businesses and industries. And that's why I'm so disappointed by Republican unwillingness to make changes to its harmful TRIA Reform Act, which is so extreme it cannot garner a majority of the House to support it. As a result, I believe we should immediately bring legislation that recently passed the Senate in a near unanimous 93-4 vote to the House floor today. Mr. Chairman, as we all head home to meet with our constituents, these outstanding items remain glaring examples of a Republican do-nothing agenda. But they are not the only ones. To date, the committee has not had one hearing on the war on poverty, no hearings on the impact of the foreclosure crisis on American families, or the independent foreclosure review process, which impacted over 4 million households, and no hearings on money laundering, an important issue that continues to go unaddressed. We've seen virtually no action on issues impacting consumers, credit reporting, and medical debt have been ignored. And instead of a broader focus on the private sector data breaches affecting hundreds of millions of consumer accounts, this committee's Republicans have made undermining consumer protection its top priority through a continued, sustained campaign against the Consumer Financial Protection Bureau. And today's markup continues the do-nothing agenda. Today we will waste more time and energy on ideological and unrealistic measures such as the so-called FRAT Act, a harmful measure that will cripple the Federal Reserve's ability to promote growth, stabilize the economy, and in times of extraordinary crisis, take decisive action to avoid an economic collapse. Mr. Chairman, when we return, I hope we can get back to work on measures that actually sustain jobs, grow the economy, protect consumers, and provide stability in our financial system. And I thank you, and I yield back the balance of my time.
Pursuant to notice, I now call up H.R. 3240 for purposes of markup and move that it be reported to the House with a favorable recommendation. The clerk will report the bill.
H.R. 3240, to instruct the Comptroller General of the United States to study the impact of
Without objection, the bill is considered read and open to amendment at any point. The Chair recognizes the gentleman from North Carolina, Mr. Pittenger, the sponsor of the legislation, for 5 minutes.
Thank you, Mr. Chairman. I move to strike the last word. Mr. Chairman Henschling, I want to thank you for holding this markup today. Today, before the committee are a number of bills to help address the onslaught of regulations pouring out of Washington. One bill in particular, H.R. 3240, the Regulation D Study Act simply directs the Government Accountability Office to study the impact of the Federal Reserve Board's monetary reserve requirements implemented through Regulation D on depository institutions, consumers, and monetary policy. The bill also directs the GAO to consult with credit unions and community banks. This legislation has strong bipartisan support, with 30 members signing on. I want to thank my colleague Carolyn Maloney for joining with me in introducing H.R. 3240. This is a common-sense piece of legislation that is not only good for financial institutions, but for American families as well. The issues of having only 6 transfers per month for bank accounts has been reviewed in several decades. With new technological advancements in online banking, we owe it to the American public to revisit this regulation. Regulation D forces financial institutions to focus on compliance rather than spending time with consumers to meet their financial needs. Former Federal Reserve Chairman Bernanke has said that the reserve balances far exceed the level of reserve requirements, and the level of reserve requirements thus plays only a minor role in the daily implementation of monetary policy. A GAO study will allow an objective assessment of whether the rarely changed monetary reserves imposed on depository institutions and consumers are necessary in order for the Fed to implement monetary policy in the 21st century. This study must report, number one, a historic review of how the Fed has used reserve requirements to conduct U.S. monetary policy. Number two, the impact of the maintenance of reserves upon depository institutions. 3, the impact upon consumers managing their accounts. And 4, the alternatives available to the Board to maintain reserves to affect monetary policy. Thank you, Mr. Chairman, and I do yield back the balance of my time.
Gentleman yields back. For what purposes the ranking member seek recognition?
I move to strike the last word.
Gentlelady is recognized for 5 minutes.
Mr. Chairman, as I see it, this bill simply instructs the GAO to study the Federal Reserve's use of reserve requirements. One of the consequences of the current policy is that consumers are limited to a small number of transactions or transfers of funds between their checking and savings account. As anyone who has a linked account knows, exceeding the allowable number of transfers can result in very expensive overdraft fees, even if the consumer has available funds in a savings account. My colleagues and I have long been concerned about the impact of overdraft charges on consumers and the impact these charges have, driving consumers to riskier and often costlier non-bank alternatives. This narrow one-time study into this particular monetary policy tool will inform Congress as to whether doing away with the monthly limit on transfers would hinder the Fed's ability to implement policies to grow our economy and lower unemployment. If doing so does not harm the Fed's ability to affect monetary policy, regulators in Congress would have the necessary information to consider whether it is appropriate to eliminate the cap on transfers and provide straightforward relief to consumers who rely on overdraft protection from their linked savings accounts. I think it's crucial that the government re-examine its policies from time to time, and as advances in technology have changed both the way that consumers interact with their banks and the tools the Fed has at its disposal, it seems appropriate to take a closer look at the requirements under Regulation D. So, Mr. Chairman and members, I would support this bipartisan bill.
Gentlelady yields back. For what purpose does the gentlelady from West Virginia seek recognition?
Move to strike the last word.
Gentlelady is recognized for 5 minutes.
Thank you. Just briefly, Mr. Chairman, I would like to congratulate Mr. Pittenger on his bill and building a bipartisan coalition. I think having the ranking member speak in support of this bill really carries the day in terms of any kind of controversial debate. So we're very happy about that. And I think what it does is this will put the focus where it needs to be, and that's on the consumer. That's on how these regulations are affecting them, how it affects their ability to get credit, how it has really put the focus on compliance rather than spending the time with the consumer to figure out what's best for them. So with that, I would like to add my voice to the chorus of support and again say how important I think this is, that building those bipartisan coalitions shows that, number one, we can do it, but number two, that we should do it. Thank you very much.
Gentlelady yields back. For what purpose is gentlelady from New York seek recognition? Gentlelady is recognized for 5 minutes.
And I truly do thank Ranking Member Waters for her support, and my good friend and colleague from the great state of North Carolina, Mr. Pittenger, for his hard work on this, and it was really a very fruitful time working together with him. Our bill simply asks the GAO to study the limitation to determine if it's still useful. Reg D limits the numbers of automatic withdrawals from a consumer's savings account to 6 per month. We want to see if this is still necessary or serves any purpose. This means that if a consumer has already hit his or her limit on automatic withdrawals for the month and then overdrafts their checking account, the bank will not transfer money from the savings account to cover the overdraft, resulting in an unnecessary overdraft fee. So we want to study whether or not that this limitation serves any purpose whatsoever, and also overall the reserve funds. The bill is supported by the Credit Union National Association, the National Association of Federal Credit Unions, and the American Bankers Association. So I urge all my colleagues to support this bill, and I yield back. And I thank Mr. Pittenger. Thank you.
For what purpose does the gentleman from Missouri seek recognition?
Move to strike last word.
Gentleman is recognized for 5 minutes.
Thank you, Mr. Chairman. Just briefly, as somebody who remembers whenever we instituted the Fed came out with this regulation back in when Moses walked the earth, probably. Back then it was the now and super now accounts when they started paying interest on checking accounts and limited your savings accounts to be able to earn greater savings interest for a limited amount of times that you could access it. This is probably 5 years ago roughly, and if we haven't updated the rules and regs, we certainly need to. As the sponsors pointed out, it's common sense. Technology has moved this to a different level to where now we can instantly know and transfer monies back and forth to keep customers in the black, and as well as serve their needs. I certainly support the gentleman's bill. I think it simply asks the Fed to study the situation, let the situation dictate how we need to be looking at it from the standpoint of the reserves that we need and the regulations we need to implement it. Again, I support the measure and thank the gentleman for bringing it forward. I yield back.
For what purpose does the gentleman from Colorado seek recognition?
I move to strike the last word, Mr. Chairman.
Gentleman is recognized for 5 minutes.
I want to thank Mr. Pittenger and Ms. Maloney for bringing this bill to study different things through the comptroller of the currency. I think it's a step in the right direction, which is very different than what the Republican majority has done generally through this Congress. The chairman started off with an economic rendition that is completely different than what the facts on the ground would state. The last 6 months of the Bush administration, this country lost trillions of dollars of wealth in the stock market, trillions of dollars of wealth in home prices, and millions of jobs. Since the Bush administration and the failed Republican economic policies, we've seen 10 million jobs gained, house prices have rebounded, and the stock market is up 10,500 points. So this Congress, under the Republican leadership, has done virtually nothing except that they can bring lawsuits against the president, which we're going to deal with this week. They can continue to pursue something on Benghazi at the cost of about $80 million to the taxpayers. They can shut down the government over the 50th time to try to repeal Obamacare at a cost of some $24 billion to the taxpayers of the United States, instead of doing something constructive like the bill before us that Mr. Pittenger and Ms. Maloney have brought. It's only taken a year and a half, a year and 3/4 to do something like this, and it's just a study. I would say to you, Mr. Chairman, that your comments that employment is lagging and the economy is not moving forward, well, it is moving forward and employment is moving forward if the Republican Congress would actually do something instead of just bring lawsuits against the president with no basis, or to continue to pursue something like Benghazi, but to focus on the real concerns of real Americans about their jobs, about the future of college education and their retirement security, this country would take off in a second. So I would say to my Republican colleagues, take a look in the mirror before you sue the president. And I'd yield back.
Gentleman yields back. For what purposes, gentleman from Wisconsin seek recognition?
Move to strike the last word.
Gentleman is recognized for 5 minutes.
I was hopeful we were off to a wonderful bipartisan hearing. It's quickly changed. I would just note for the record that I believe the number is 355 jobs bills that we've passed out of the House that now sit in the Senate waiting for action. Several of those bills are bills we passed out of this committee through the House floor, and remarkably, we've had a lot of bipartisan support on some of the regulatory relief bills that we passed. And it's disappointing that some of our colleagues in the Senate, led by the Democrat majority leader, won't take those bills up, especially when we're trying to do some very simple things that lift the regulatory burden off a lot of small community banks. I think this is a great example today of us working together on a bipartisan level with a simple request for a study to lift an old rule that is out of date. But this isn't the first time we've done it. Mr. Pittenger, again, building bipartisan support. We've done this with many other bills that will lift that burden. And so I know my friends across the aisle don't agree with everything we've done, but the real issue here isn't all the action that's taken place in the House, it's inaction in the Senate. And I would encourage my colleagues across the aisle to give a little push and a nudge to the friends in your party to actually pick up some of those bills and make a better effort to lift the burden off our small community banks and credit unions, helping Main Street America get capital to flow to families and small business owners. With that, I yield back.
Gentleman yields back who seeks recognition. Chair recognizes himself for 5 minutes. I guess the spirit of bipartisanship lasted about 19 minutes on a bill that seemingly most people agree with. I know that the Blame Bush caucus is a shrinking caucus. I think the president himself allowed his membership to lapse. I haven't heard it out of him for a while. I look forward to the gentleman also reviewing history to let us know how we can blame Coolidge and Garfield and Lincoln as well for what other might travails the nation at this point. I would simply say that I want to thank the gentleman from North Carolina for his work and for working on a bipartisan basis. This is exactly the kind of regulation and, frankly, the kind of oversight we ought to be doing. Even if a regulation made sense at its time, it may be hurting low and moderate income Americans who are struggling in this economy today. From the evidence I've seen, it's not a particularly impactful tool for monetary policy, but regrettably it does impact the bottom line of many struggling low and moderate income Americans in this economy. So it certainly ought to be reviewed, and again, it's part of the idea that we ought to be looking at the actual cost and impact that these regulations have on lower and moderate income Americans and not just their purported benefits. I'm certainly also very encouraged that the ranking member has signaled her support for something that calls into question an action of the Federal Reserve. So I'll certainly look forward to her full enthusiastic support for the Federal Reserve Accountability and Transparency Act, which we will mark up later today. Chair yields back. Who seeks recognition? Are there any amendments to the, for what purpose the gentleman from Ohio seek recognition?
Thank you, Mr. Chairman. I move to strike the last word.
Gentleman's recognized for 5 minutes.
I don't need 5 minutes, Mr. Chairman. I just wanted to applaud the chairman for his comments that he just made, because I think that's the point of the bill. That's why this bill is bipartisan. This policy that made sense maybe when it was enacted, is hurting low to moderate income people that might try to put money into a savings account every month to save for themselves and then try to get access to it as they need money, maybe transferring money to their checking account. If you do it online, you do it more than 6 times a month, your bank's going to penalize you. It really hurts low and moderate income people, and frankly, savings accounts are free, checking accounts cost money these days, and it's a problem for low and moderate income people to be able to accumulate wealth. And I really applaud what the gentleman from North Carolina is doing here and the gentlelady from New York. I want to thank them for their efforts, and I hope we can get this committee back on a bipartisan basis of helping people. Thank you. I yield back.
Gentleman yields back. Are there any amendments? Not. The question occurs on reporting the bill favorably to the House. Those in favor say aye. Aye. Those opposed say nay. In the opinion of the chair, the ayes appear to have it. The ayes have it, and the bill is ordered reported favorably to the House. Members will have 2 days to submit views. Pursuant to notice, I now call up H.R. 4042 for purposes of markup and move that it be reported to the House with a favorable recommendation. The clerk will report the bill.
H.R. 4042 to require a study of appropriate capital requirements for mortgage servicing assets.
Without objection, the bill is considered read and open to amendment at any point. The chair recognizes the Vice Chairman of the Housing and Insurance Subcommittee, Mr. Lukemire, the sponsor of the legislation, for 5 minutes.
Thank you, Mr. Chairman. Mortgage servicing assets, or MSAs, also known as mortgage servicing rights, are contracts to service mortgage loans. Historically, these assets have been held by banks that have existing or develop relationships with their customers. However, the Basel III negotiations dramatically changed the capital requirements for MSAs, forcing many financial institutions to sell off these assets. Many have been sold to hedge funds or other non-banks with little to no experience in dealing directly with consumers. Last year, a bipartisan group of 5 members of this committee sent 2 letters to the Federal Reserve, the OCC, and the FDIC asking whether or not they had studied MSAs or MSA performance during the financial crisis before finalizing the Basel-generated capital requirements. The answer was pretty clear. The regulators had not. There was no consideration of MSAs, how the assets have performed historically, or the impact that higher capital standards would have on consumers. What is more disconcerting, MSAs exist only in the United States. These are a uniquely American product, yet the capital requirements were developed by an international body. Nowhere else in the world do MSAs exist, yet it was international regulators who decided how these assets should be treated. Early this year, New York State Superintendent of Financial Services, Benjamin Losky, addressed MSAs before a meeting of the Institute of International Bankers, and he stated, we're creating giant non-bank servicers who, in a couple of instances, are not fully prepared to deal with this exponential rise in their portfolios, and they don't have the capacity to service the loans they're taking on. Losky went on to say that while on the one hand we're trying to get rid of a problem, we may have made a different problem worse. H.R. 4042 is a straightforward bipartisan bill. The bill simply states that the U.S. banking regulators need to go back and study MSAs and the impact the new capital requirements will have on consumers. I want to be clear about a few things this bill will and will not do. First, this legislation only applies to those banks that have not been designated as global SIFIs. Second, the current capital regime for MSAs will stay in place while the banking regulators study the Basel III proposal. MSAs are currently subject to extra capital requirements, and this legislation will not change that. Third, and to be clear, banking regulators maintain all supervisory and enforcement tools under this legislation. After the study, the bank regulators could come back and say that the treatment is appropriate. At the very least, we will know that they've examined the implications of their actions. Given that we've seen in the MSA space in the last year, I think it is not only appropriate, but completely necessary that we take another look at MSAs. Mr. Chairman, one final comment before I yield back. I intended to offer an amendment that would provide parity to credit unions. Like many of my colleagues, I remain very concerned by the National Credit Union Administration's proposed risk-based capital rule. I'm also disappointed by the letter sent by NCUA Chairman Debbie Matz yesterday requesting, and I quote, that the House Financial Services Committee refrain from considering amendments to tomorrow's markup related to NCUA's risk-based capital rule. I want to assure Karen Matz that my decision is not in any way based on her unprecedented request that this committee refrain from conducting its work. Rather, there are issues on which I'm working with my Democratic colleagues. I will continue to work with them to ensure that credit unions are given parity before H.R. 4042 reaches the floor for its consideration. I also want to thank Mr. Perlmutter for his work on this legislation, and I ask that my colleagues support our effort to ensure that a more methodical approach is taken by the bank regulators. With that, Mr. Chairman, I yield back.
Would you yield to the chairman?
Yes, I'll certainly yield back to the chairman.
I just want to, number one, acknowledge the gentleman's hard work in this area. Certainly, he has been a great leader on this committee in trying to help sustain and preserve our community banks and credit unions. This is obviously one more piece of good work the gentleman has done. I also want to acknowledge what he said about credit unions. I support that movement. I plan to work with the gentleman, work with the ranking member to ensure that we can bring in credit union parity, hopefully before this bill goes to the floor. And I thank the gentleman for his work and for yielding. Gentleman yields back. Who seeks recognition? For what purpose did the gentleman? For what purpose or what president will the gentleman from Colorado now blame?
Mr. Chairman, I move to strike the last word.
Gentleman is recognized for 5 minutes.
Thank you. And I thank the gentleman from Missouri for sponsoring this bill. It's an important bill. It requires bank regulators to study and provide Congress with a report on the impact of imposing new capital requirements on mortgage servicing assets. So when a bank services a mortgage, sends out notices to the borrowers, pays the taxes, pays the insurance, that's mortgage servicing. And under certain regulations that have come down through the Basel III regulations, it's much harder for banks and federally insured institutions to maintain this servicing. And we think that they ought to be able to maintain this servicing, especially since there is good oversight of these particular endeavors by the banks. So the regulators will have 1 year to complete the study, and then if they find consumers and the market are negatively impacted, then the regulators will have an additional 6 months to repropose and implement new risk-based capital rules for mortgage servicing. While we await the results of this study, the bill would temporarily delay the new capital requirements on these mortgage servicing assets only, and not on the entirety of these Basel capital requirements. The MSA market has been fundamentally altered since the financial crisis. While banks have been eliminating risk from their portfolios, the treatment of mortgage servicing under the new Basel capital standards has led to a significant sale of them from banks to non-banks, including private equity firms, hedge funds, and specialty non-bank servicers. The problem, as I said, is these new entrants into the market aren't subject to the same level of oversight, scrutiny, and capital requirements as banks are, and if there is another sudden market disruption or downturn, it is unclear whether these firms have the capacity to manage defaults or modifications. The bill that the gentleman has sponsored and I co-sponsor will provide some review of the impact of mortgage servicing on all of our banks, and it will give smaller banks a chance to maintain servicing, which generally provides a good revenue stream to them for services they provide to others in managing these mortgages. So I would, at this point, yield back. I'm sure I'll have some things to say about other bills and about the conduct of this Congress, but with that, I would yield back to the chair.
Gentleman yields back. Who seeks recognition? For what purposes? Gentlelady from West Virginia seek recognition.
I'd like to move to strike the last word.
Gentlelady is recognized for 5 minutes.
Thank you. I'd like to thank the chairman, and I'd also like to thank Mr. Lichtmeyer and Mr. Perlmutter again for their bipartisanship on this piece of legislation. Just very briefly, I think we have seen problems in the mortgage servicing business in recent years, but it does not make sense, and I think we had this in the testimony, certainly from Sam Blandingham, who is a banker at First State Bank from West Virginia, talked about getting out of the mortgage servicing business, which just puts him further away from his customer. And more importantly, puts that customer further away from the relationship that they've developed over the years as they've created a mortgage that they can afford and wish to be able to keep. And if they have any problems, they know exactly who, when, and where to go. So I want to thank the gentleman for putting this forward, and I'm wholeheartedly in support of this bill, and I yield back.
Gentlelady yields back. For what purposes? Gentleman from Washington seek recognition.
Move to strike the last word.
Gentleman is recognized for 5 minutes.
Thank you, Mr. Chair. I want to thank the gentleman from Missouri and the gentleman from Colorado as well for their collaborative effort in this regard, and also want to thank the Chair for his remarks regarding the issue of risk-based capital requirements relative to credit unions. I don't want to leave this point without reinforcing it and reiterating it. Many of us joined in signing a letter, in fact more than 300 of us, and I believe the gentleman from Missouri was on that letter, urging the administration to stand down from the direction they were taking. I just want to volunteer myself, and I'm sure there would be many others here on this side of the aisle, more than willing to work with you in making sure we do not lose sight of this as we move forward and the bill makes its way to the floor. And with that, Mr. Chair, I yield back the balance of my time.
Gentleman yields back. Who seeks recognition? Are there any amendments? There being no amendments, yes. For what purpose does the ranking member seek recognition?
I have an amendment at the desk.
We will pause for a moment and allow the amendment to be distributed. Is there any member who has not received a copy of the amendment? The clerk will report the amendment.
Amendment offered by Ms. Waters, page 2, strike line 1 through 4 and redesignate subsequent paragraphs accordingly. Page 2, after line...
Without objection, the amendment is considered read. The gentlelady is recognized for 5 minutes to explain her amendment.
Thank you very much, Mr. Chairman. The intent of Basel III's heightened sensitivity with respect to mortgage servicing assets stems from regulators' justifiable concerns about banks' over-concentration of certain assets like mortgage servicing assets or MSAs. I have consistently opposed attempts to delay Basel III implementation, as doing so introduces substantial uncertainty and slows progress on creating a stable financial system. While I am skeptical of any attempts to delay Basel III, I'm equally concerned that actions taken to date concerning the treatment of MSAs have contributed to the explosive growth of lightly regulated non-bank mortgage services. Regulators, consumer advocates, and investors have all expressed their dismay at the massive growth of non-bank mortgage servicers in particular, and mounting evidence from court documents and regulators such as the CFPB, the FHFA, FSOC, as well as consumer advocates suggests that the industry ability to do so is a matter worth studying. I believe that this committee should also study potential regulatory approaches for non-bank mortgage servicers, raising standards across the board that address the unique challenges that their business model poses to consumers, the GSEs, investors, and to the broader economy. I cannot at this time support H.R. 4240 as currently drafted because it imposes substantial delays on Basel III implementation. The study is not limited to community banks, and the proposal fails to consider how regulators should address the growth of non-bank mortgage services. Therefore, I'm proposing an amendment limiting the scope of the study to community banks, while expanding the inquiry to include a consideration of potential regulatory approaches that address the risk that non-bank mortgage services pose. The amendment also proposes a shorter time to complete the study and shorter period for delaying Basel III implementation. I hope that we can amend this bill to focus on community banks and to allow the regulators to continue to improve the stability in the financial system. I ask for an aye vote on my amendment, protecting and being concerned about community banks. I yield back the balance of my time.
Gentlelady yields back. For what purpose does the gentleman from Missouri seek recognition?
Strike the last word.
Gentleman is recognized for 5 minutes.
Thank the lady for her offering here. The part that I actually like in her bill is, or her amendment, excuse me, is that she changes the time frame for the study from 12 months down to 6 months, and I really have, and then the time for implementation from 6 months down to 3 months. So I really have no problem with that part. I think that's a good way to go. It speeds things up, and I'm sure they can do this in a very quick fashion. I do have concerns, though, with the balance of the amendment. Number one, we're trying to define a community bank with regards to mortgage servicing as a $10 billion or less institution. And I think if we remember just last week, we had the former chairman of this committee, Mr. Frank, who the Dodd-Frank bill is actually named after, made the comment during the course of that discussion that he didn't think size is something that necessarily is significant when you start talking about SIFIs. It's something you need to think about, but it's not the only criteria, and it shouldn't be the criteria. It's something that, and so here we go from just going away from size and going more to systemic connectivity and riskiness of the activity, down now to putting another floor in here on something which I think is going backwards from where I think even the former chairman was supportive of with regards to change of his own bill. And the other thing I'm concerned about in here is to define a systemically important non-bank servicer. I, for the life of me, being in the business as an examiner and a banker for almost 40 years, yeah, I'm that old, I can't see how an entity that is a loan servicer is systemically important. All they do is handle the servicing of loans. They don't have the assets themselves. They don't, the banks package them and sell them to the secondary market or whatever, and these folks then service them, and the risk is with whoever holds the loan. So I really am concerned about even putting that into the bill, is suddenly we now have a non-bank mortgage servicer as a SIFI. I really have concerns about that, and so therefore I would recommend that we not support the amendment, and certainly be glad to further discuss it if any other members have any questions. With that, I yield back.
Gentleman yields back. For what purpose? The gentleman from Colorado seek recognition.
Move to strike the last.
Gentleman is recognized for 5 minutes.
So I agree with my co-sponsor on this bill that the $10 billion is too low. I would suggest that we work with the ranking member to see if there is a number, whether it's 50 or 100 or 250 or something that might be more acceptable. I also agree with the gentleman about the reduction from 1 year to 6 months and from 6 months to 3 months, and I would ask the chair kind of a procedural question, how we could sever the amendment to provide, and so have two votes, one on the $10 billion community bank language, but then also have a vote, because there are no, at least on my amendment, I don't see any lines, numbers next to on page 3. So ordinarily I would say we sever it and we vote separately on lines 1 and 2 and probably what are 6 and 7 on page 3 from the balance of the amendment. Or maybe we should just have a second, maybe I should just draft another amendment that talks about the time frame. So I would ask the chair for some advice.
If the gentleman yields to the chair, one, if there is consensus within the committee, we could either, one, take it up as a separate amendment. We could technically divide. We can take it up as a separate amendment. We can work on it before going to the floor. My guess is it would be perhaps most efficient simply to take that portion of that amendment and offer it as a separate amendment. I thank the gentleman for yielding.
Regaining my time, I would think that may be a simple way, and we'll if the ranking member, because I am, without some modification to that $10 billion figure, I generally am opposed to your amendment and supportive of these reduced timeframes, and I would suggest we do a second amendment depending upon how this either rises or falls.
If the gentleman would yield?
I would yield.
I'm certainly open to the issue of whether or not the amount, the cap of $10 billion can be changed, can be increased, and I would yield to the gentleman to tell me what he would like to offer.
I don't know that I have a number. I haven't spoken to the gentleman from Missouri about this in any depth. And I would ask my friend from Missouri. I know he always does operate in a way that we can have discussions between now and the floor as to what an acceptable number might be and see if that works for you. I would I guess what I would do is ask you to withdraw this amendment. I'll offer a second amendment on the time frames, and then we could discuss between here and when this is brought to the floor as to whether there's an amount that you might find that works. With that, I would...
will the gentleman yield?
Yes, of course I'll yield.
First, before we deal with that issue, I would like to say in response to the gentleman that the reason I'm concerned about mortgage servicers is because of the role that they have played in this whole foreclosure problem we've had. You describe the mortgage servicers as those who simply, collect payment of the mortgage and late fees and all that kind of stuff. But their mission, their responsibility, their actions are far broader than that. What we discovered when we was forced to take a look at this whole subprime meltdown was what role was the mortgage services playing, and they played a significant role. They made decisions about foreclosures, and in making those decisions, we discovered that the mortgage servicers did not have criteria by which they absolutely made their judgments based on, but rather they were all over the place. And so we found many people seeking loan modifications that did not get them because the loan servicers were not well trained in some cases. In some cases, they handled the paperwork very poorly. In some cases, they didn't know all of the income to take into consideration, on and on and on. And it's not my time. I will yield back to the gentleman.
There's nothing to yield back. Who seeks recognition? For what purpose does the gentleman from Georgia seek recognition?
To strike the last word.
The gentleman is recognized for 5 minutes.
I yield to my friend from Missouri.
Thank you, gentleman from Georgia. Just in response to the ranking member, if there are problems with loan servicers, I'm not sure you want to define them as a SIFI. I think what you do is you go in and you solve the problem that they have or that they are causing, and with a rule or regulation or some sort of oversight. But I don't know that naming, to me, a systemically important financial institution is what SIFI stands for. I'm not sure that they are somebody that if the servicers went away, or if a servicer went away, that it would cause the whole financial system to collapse. And I think that's one of the things, one of the concerns I have with that section here. I'm more than happy to work with the ranking member with any sort of suggestion to improve the oversight or improve the ability of servicers to do things correctly, protect consumers, however she may feel that can be done. But to put into statute what a systemically important non-depository loan servicer is as a SIFI is just beyond my comprehension as somebody in the business for 40 years. And a lot of this all stems from the fact that we're looking at a bill or here that will relieve some of the capital requirements that even the regulators can't define what a risk-weighted asset is with regards to mortgage servicing. You know, they want 100% capital coverage, and now that the new rule is 250%. And if you ask them, which we did, my office has asked them repeatedly, tell me what a risk-weighted asset is so we can understand what you're trying to get at. And this is where this bill gets to, is to try and define what the actual servicing risks are, as well as put in place some, you know, basically let the study define what we're doing here and tell us the direction we need to go. And I'll be glad to yield to my co-sponsor, the gentleman from Colorado, Mr. Promo.
Time belongs to the gentleman from Georgia.
Oh, my apologies, Mr.
I would be willing to yield to the gentleman from Colorado.
I thank the gentleman from Georgia. That's the point. By taking the Basel capital standards and applying it to what we've done in Dodd-Frank, they don't match. And so mortgage servicing is generally a revenue stream to the financial institution providing those services of notifying the borrower, paying the taxes to the local government, paying the insurance on the property and casualty. And there are times when it gets difficult for them. And the lady from California is correct that sometimes there is stress on that mortgage servicing operation. But the Basel capital standards and the Dodd-Frank legislation really don't talk about that. And that's what this study is needed. And I guess the gentleman from Missouri and I are trying to make sure that most financial institutions can provide this service to their customers, to other financial institutions. And I would just ask the gentlelady to withdraw her amendment.
Time belongs to the gentleman. Would you yield to the chair?
I will yield to the chair.
I thank the gentleman for yielding. Again, I kind of think this is, to some extent, this is a classic case of unintended consequences of the legislation. Again, what is happening here is that we are chasing the mortgage servicing business out of a number of our community banks, going into an area that I would think my Democratic colleagues would be even less happy and less secure with. I also wouldn't necessarily worship at the altar of Basel, since it was Basel to a great extent who told us that practically no capital had to be reserved against mortgage-backed securities and sovereign debt. Think Fannie, Freddie, and Greek bonds. We know where that led us, so they don't always get it right. I would just note for the record from my friend from Colorado, we should note, to the best of my knowledge, President George W. Bush has not opposed the gentleman's amendment, yet the ranking member has. I'm sure at the appropriate time he will tell us more about that. But I also, if the ranking member chooses not to withdraw her amendment, I would urge that it be defeated and we support the underlying legislation from the gentleman from Missouri and the gentleman from Colorado. Who seeks recognition? For what purpose does the gentleman from Massachusetts seek recognition? The gentleman is recognized for 5 minutes.
Thank you, Mr. Chairman. Mr. Chairman, the truth is I don't know if $10 billion is the right number. Any number could be right. I'm happy to work with that. I like the idea of moving it down to 6 months because I think a lot of this information is already available. And I'm not a big fan of the way we have been stumbling towards Basel III. Yet, after 2008, there's really only one thing I'm interested in, and that's financial fiscal stability. That's what I'm interested in. And when I think that might be jeopardized, I will always err on the side of caution, knowing full well that it does restrict somebody's rights to do this. On this particular issue, I want mortgages kept local. I think it's a good idea. Said that to you personally and publicly here when Mr. Frank was here. And I don't think size is a solely determinative issue. No one does. But size does count towards something. It is a factor. All that being said, here's an opportunity, if not with this amendment, with something between now and the time we voted on this on the floor, to get not just a bipartisan bill, but an overwhelmingly bipartisan bill that will then go to the Senate and not become one of those 340 some odd bills that are sitting there. And by the way, when Democrats ran the House, we had the same problem with the Senate, so welcome to our world. And to me, the question is, do you want this bill to pass the House with or without the ranking member's support? And if you think it can get through the Senate easier without her support, and not just hers, many of our support, well, then go ahead and do it. You'll have the votes. We can count. Or if the idea is to actually get a law passed that actually helps our constituents and gets closer to what you might want, here's an opportunity to reach out, to find common ground. I've heard Mr. Perlmutter say he's looking for a number. Ranking member has said she's more than willing to move off at $10 billion. Between now and the time it gets to the floor, today is not the day to do this. I would strongly ask and suggest, in the spirit of bipartisanship, as we all know that I am Mr. Bipartisan, in the spirit of actually passing something that matters, instead of making a political statement that passes the House and then dies, why not work together to come up with something that does limit? If it's not on size, on risk, however you want to measure it. And by the way, this only applies for 6 months or a year, whatever we come up with. And then as I read this legislation, correct me if I'm wrong, Basel III just goes into effect. They can come up with a study, a 2-page study that says, too bad, tough luck, Congress, Basel III goes into effect, and we're back at square one. So why not try, to the best of our ability, to get us almost all, if not all of us, on the same page, make a strong statement from the House that will then have a high likelihood of success in the Senate, to actually make a real statement, not just a political one, that says, we're not gung-ho about what this is doing. So with that, I don't have a particular amendment, and either this amendment, if it doesn't pass or if it's withdrawn, fine with me. But I would urge the sponsors of this to find common ground. It is available on this issue. The question is, do you want to find it, or do you simply want to get your way? If you want to get your way, you'll win.
Would the gentleman yield?
Of course I would.
I thank the gentleman for yielding, and I appreciate the spirit of his comments. I would just note, and I don't have the numbers right in front of me, but there has been well over a dozen, maybe 15 different bills that have come out of this committee, gone to the floor with incredibly strong bipartisan support, including that of the ranking member, and they go to where all good ideas go to die, and that's the U.S. Senate. So my only point to the gentleman, and I do thank him for yielding, that regrettably, when we act in a strong bipartisan manner, which occasionally we do, it doesn't seem to persuade the other body.
I thank the chairman for that, and I've made no guarantees. I wish I could guarantee what the Senate would do. My stock would go up dramatically. But I think it is clear that the chances of success in the Senate are much greater when we have true widespread bipartisanship than when we have superficial bipartisanship.
Well, you're absolutely right. I indicated that I would certainly be willing to consider a different amount for the community banks. We all talk about the community banks, that we want to support them. This should be a strong community bank support bill. I'll withdraw the amendment if, in fact, my colleagues on both sides of the aisle are willing to work on the other part of the amendment. You will take care of the time frame, but we need to talk about community bank size and how to define that. I yield back to the gentleman.
Mr. Chairman, and I yield back the time I don't have.
Okay, the amendment from the gentlelady from the ranking member has been withdrawn. Are there any other amendments? For what purpose does the gentleman from Colorado seek recognition?
To move to strike the last word, sir.
The gentleman's already been heard on this. Is the gentleman offering an amendment?
Yes, I have an amendment.
Okay, so the gentleman has an amendment at the desk. We will pause for a moment and allow the amendment to be distributed. Is there any member who's not received a copy of the amendment? The clerk will report.
Amendment offered by Mr. Perlmutter, page 4, line 25, strike 1 year and insert.
Without objection, the amendment is considered read. The gentleman is recognized for 5 minutes to explain his amendment.
Thank you, Mr. Chair. We've heard the discussion. This reduces the study time from 1 year to 6 months, and the re-proposals from 6 months to 3 months. Mr. Luchtermeyer and I agree with that was a portion of the ranking member's amendment, and I would just move that amendment. I yield back. Would you like me to yield to you? Yes. I yield to the ranking member.
Well, first of all, I'd like to thank you for the consideration rather that you have given to this whole issue, and your commitment to work with me on the community bank definition. I appreciate it so much, and I want to know if I have the same commitment from the opposite side of the aisle.
I yield to my friend from Missouri.
I would go back to the gentleman to yield to the gentleman.
I yield to the gentleman from Missouri.
Lots of yielding to gentlemen.
Thank you, gentlemen, for my co-sponsor from Colorado. I certainly appreciate his efforts here. I certainly support his amendment. And appreciate the comments, especially Mr. Capiano from Massachusetts, with regards to trying to move this issue forward. I certainly appreciate the ranking member's efforts and certainly pledge my support to try and work with her to come up with a definition here that's going to work with everybody. More than happy to do that. Look forward to that opportunity. But I do appreciate you withdrawing, and so we can get to the amendment of the gentleman, and we can work on the other part as we go along. With that, I support the amendment, urge the support of everybody else as well. Thank you, Mr. Chairman. I yield back to Mr. Paul.
And I yield back to the chair.
The gentleman yields back. Who seeks recognition? Are there any amendments to the amendment? The question is on agreeing to the amendment. All those in favor say aye. Aye. Those opposed say nay. In the opinion of the chair, the ayes appear to have it. The ayes have it, and the amendment is agreed to. Are there any further amendments? There being no further amendments, the question occurs on reporting the bill as amended favorably to the House. Those in favor say aye. Aye. Those opposed say nay. In the opinion of the chair, the ayes appear to have it. The ayes have it. In the bill as a... Yes, for what purpose, the gentleman from Missouri?
Request a roll call.
Recorded vote has been requested. Those in favor of recorded vote will raise their hand and be counted. A sufficient number having raised their hands, a recorded vote is ordered pursuant to subsection C5 of Rule 3 of the committee rules. The vote on this question is postponed. Pursuant to notice, I now call up H.R. 5148 for purposes of markup and move that it be reported to the House with a favorable recommendation. The clerk will report the bill.
H.R. 5148, to amend the Truth in Lending Act to exempt certain high-risk mortgage...
Without objection, the bill is considered read and open to amendment at any point. The chair recognizes the vice chairman of the Housing and Insurance Subcommittee, yet again, Mr. Luchtermeyer, the sponsor of the legislation, for 5 minutes.
Thank you, Mr. Chairman. One of the most common themes of this committee has been the need to help community banks and credit unions and to offer our nation's financial institutions some sort of relief from a growing slate of regulatory burdens. Today we have an opportunity to provide some of that meaningful relief, particularly to those institutions operating in rural areas. H.R. 5148 will help to bring down costs associated with obtaining a mortgage, allowing more Americans to achieve the American dream without jeopardizing their ability to maintain it. Current law dictates that lenders of high-priced mortgage loans, or HPMLs, are required to obtain a full appraisal from a licensed or certified appraiser. This legislation removes the appraisal requirement on HPMLs under $250,000 in value and held in portfolio by a creditor. On those HPMLs, H.R. 5148 waives the real estate appraisal standards to which appraisers must adhere under current law. This will allow appraisers to conduct evaluations on HPMLs without having to meet rigorous and unnecessary standards that drive up the cost of conducting appraisals. I'm from a rural county and was a rural banker. I can tell you that there are many counties across the country that have few, if any, appraisers. I talked to one banker who hasn't had an appraiser live in his county for more than 20 years, meaning each time he initiates an HPML, he has to get an appraiser from several hours away. There's a cost to this. I want to put in perspective for my colleagues what kinds of loans we're discussing. Many of these loans are very small amounts on unique properties. They're the $20,000 loans on manufactured housing, the $50,000 loans for a starter home for a young family. These are loans typically few and far between and are generally made by smaller financial institutions that have a personal relationship with the borrower. As a reminder, the relief in this bill only applies to those institutions that hold these HPMLs in portfolio. A banker who holds these mortgages on the books has every incentive to make sure that the appraisal is accurate and the borrower is a mortgage he or she can afford. Many bankers tell me they can't get an appraisal for less than $500, regardless of the loan amount. One banker said that prior to 2010, closing costs on a $27,000 loan ran roughly $400. Today, that number has climbed to $1,750. Something has to be done to reduce the costs of HPMLs. Closing costs have skyrocketed since the financial crisis. This is a little step we can take to ensure that those low to moderate income Americans entering into the HPML keep more money in their pockets and continue to have access to quality mortgages. I ask my colleagues for their support on this small but important piece of legislation. I yield back the balance of my time, Mr. Chairman.
Gentleman yields back. For what purpose does the ranking member seek recognition?
Mr. Chairman, this bill...
Gentlelady move to strike the last word.
Move to strike the last
Gentlelady is
word.
recognized for 5 minutes.
This bill serves as proof of how short memories can be. Just a few years since the worst financial crisis in this country we had seen in almost a century, which was caused in large part by shoddy lending practices. Now we are being told that we should peel away the common sense reforms that would have prevented it. In the lead up to the crisis, it was common for appraisers to fail to perform any due diligence, and there was little incentive for lenders to check their work. This led to an astounding number of misvalued properties and misunderstood risk to banks and investors. The Dodd-Frank Act created independent standards for appraisers to ensure this wouldn't happen again. These are common sense requirements, like requiring an appraiser to physically visit a property and judge it with their own eyes. We also created penalties for banks that knowingly failed to report breaches of these standards. This kind of self-policing should have already been industry practice, but as we learned in the crisis, when enough money is at stake, people often make bad decisions or willingly turn a blind eye to them. Most importantly of all, this bill exempts the types of loans that are going to be offered to those most in need of additional protection. High-cost loans under $250,000 are exactly the kinds of loans moderate and low-income borrowers with credit histories that don't qualify for prime rates depend on. In addition to the consumer protection concerns, misvalued assets on a bank's balance sheet could lead to additional instability, as banks that require liquidity may not be able to sell them into the market, or the FDIC may not be able to recover value from a failed institution. This is a misguided bill that ignores lessons learned from the financial crisis and undermines the progress we have made stabilizing the financial system and enhancing consumer protections. Despite the gentleman's good intentions, I strongly urge my colleagues to vote against this bill. I yield back the balance of my time.
Gentlelady yields back. For what purpose does the gentlelady from West Virginia seek recognition?
Move to strike the last word.
Gentlelady is recognized for 5 minutes.
Thank you, Mr. Chairman, and I'd like to thank Mr. Luckmeyer for bringing this bill forward. Living in a rural community as he does and I do, this is one of the appraisal situation that's been created has really, I think, harmed the home buyer. And I'm not sure any accuracy has really been gained by having to bring an appraiser in from a long distance who doesn't understand the local markets, particularly in the rural areas. Because while you think it might change, it does change significantly. And I can just say in the state of West Virginia that it has resulted in higher cost of appraisals, which are passed down to the home buyer. To which somebody, and sometimes it's a third party that ends up making the money because they're the ones that are referring the financial institutions to appraisers in all different areas of the state. And so it doesn't go to the actual appraiser to hopefully make the quality of their appraisal maybe better. And it just adds the price of the mortgage. And he's dealing with properties that are 250, is that correct? 250,000 and under that the bank keeps on their own portfolio. So I think that builds in some safety issues in terms of these ballooning real estate prices that we saw in 2008. And so I would say that this is a common sense reform. This is, if you get in a group with home buyers and realtors and home builders and particularly in the rural areas, the one thing they've had the most difficulty for, because we don't have a legion of appraisers sitting by waiting to help. You have to really stretch to find ones that understand your market and that are close by. I think this makes great sense, and I think it could work well, particularly in the area where our average home price is under $200,000, and it would probably result in less cost to the home buyer, who in that low and moderate income area really have difficulty coming up with those upfront costs.
The gentlewoman yield? Would the gentlewoman yield?
Yes, I would yield.
Well, I want to echo what the gentlewoman said. And one of the things that I've been very concerned about, and I'm hearing from a number of my community banks, we're just making it very difficult for the small community banks to make real estate loans in their community. And in many cases, they are the only lender that is available to make those kinds of small mortgage loans. And so I want to commend the gentleman from Missouri for his a great bill here, and I encourage folks to support that, because if we don't reverse this trend of making it difficult to make these loans in these small communities, it's already a struggle for many of these communities to provide housing. And if there's no loans available for those folks, it's going to be even more difficult. So with that, I yield back to the gentlewoman.
I yield.
Would the gentlelady yield to the chairman?
Yes.
I appreciate the gentlelady for yielding. Common sense seems to be the favorite phrase of the day, and I could not agree more that the gentleman from Missouri has a very common sense bill here for us to take up. I, too, represent a congressional district that has a large rural population. And again, what we have seen post-Dodd-Frank is community banking withering on the vine. The sheer weight, volume, complexity, cost of the regulatory load. Now, again, the question is not regulation or no regulation, but the question or the debate should be between smart regulation and dumb regulation, and some recognition of who bears these costs. And at the end of the day, so many of these costs are passed on to low and moderate income Americans trying to buy their first home, many of whom really can't afford these extra costs. And so for what benefit? I mean, this is a loan under $250 that has to be on portfolio for at least 3 years. There's every incentive of the bank to get the right appraisal in the first place, because they're taking the risk. They are underwriting the risk. It has to stay in portfolio for 3 years. So if all we're going to do is drive up cost for those that my friends on the other side of the aisle claim they want to protect, with little to no benefit on the other side, and to have community banking continue to wither, no, thank you. I think we ought to support the gentleman from Missouri. I thank the gentlelady for yielding. I yield her back her 5 seconds.
Thank you. I yield back.
Who seeks recognition? Are there any amendments? There being no amendments, the question occurs on reporting the bill favorably to the House. Those in favor say aye. Aye. Those opposed say nay. In the opinion of the chair, the ayes appear to have it. A recorded vote has been requested. Those in favor of a recorded vote will raise their hand and be counted. Sufficient number having raised their hands, a recorded vote is ordered. Pursuant to subsection C5 of Rule 3 of the committee rules, the vote on this question is postponed. Pursuant to notice, I now call up H.R. 3913 for purposes of markup and move that it be reported to the House with a favorable recommendation. The clerk will report the bill.
H.R. 3913 to amend the Bank Holding Company Act of 1956 to require agencies...
Without objection, the bill is considered read and open to amendment at any point. The chair recognizes the Vice Chairman of the Financial Institutions and Consumer Credit Subcommittee, Mr. Duffy, the sponsor of the legislation, for 5 minutes.
Thank you, Mr. Chairman. On December 10th, 2013, 5 regulators finalized rules required under Section 619 of the Dodd-Frank Wall Street Reform and Consumer Protection Act. This was commonly referred to as the Volcker Rule, and the process began as a 298-page proposal and included 1,300 questions seeking comment on over 400 topics. It ended in a 932-page rule 2 years later. Unfortunately, during that time, a cost-benefit analysis was never conducted, partly because the regulators ran out of time, but also partly because they believed that they were not required to do so. They believe that because the Bank Holding Act, which Volcker amends, has no such cost-benefit analysis requirement. Today, my bill will make that a requirement. The Volcker Rule attempted to outlaw proprietary trading, which is the practice of banks using their own federally insured money for profit. While this is laudable, it's almost impossible to determine proprietary trading from market making, which is when banks invest money on behalf of their clients. Consequently, the OCC estimated that the Volcker Rule will cost banks anywhere from $413 million to $4.3 billion. This rule could cost up to $4.3 billion. Unfortunately, we won't know for sure until the rule takes full effect and the costs are passed on to the American consumer. This is no way to conduct business, and we should not continue this lack of cost-benefit analysis as we move forward. But moving forward, since the regulators have made clear that they have no intention of reposing this rule, the best we can do is make sure that when they update the rule, they do it the right way. For this reason, I have introduced H.R. 3913, which would require a cost-benefit analysis like that required by the SEC for any additional rules made under Volcker. I urge my members to support this common-sense reform. With that, I yield back.
Gentleman yields back. For what purpose does the ranking member seek recognition?
Move to strike the last word.
Gentlelady is recognized for 5 minutes.
Mr. Chairman and members, this bill places significant additional requirements on our federal financial regulators to consider certain economic consequences before modifying the Volcker Rule, which would open them up to endless litigation and effectively discourage any efforts to make any necessary modifications to the rule in the future. The Volcker Rule, adopted last December, is based on a simple concept. Loan-making, deposit-taking banks should not be engaged in speculative trading or investing in hedge funds. Doing so threatens the safety and soundness of the financial system and harms taxpayers. Indeed, proprietary trading by banks was a cause of the 2008 financial crisis, the worst financial disaster since the Great Depression. When proprietary trading losses in the 2008 crisis occurred outside of commercial banks at Bear Stearns and Lehman Brothers, these losses spread across the system as a contagion, as these investment banks were highly interconnected to commercial banks through opaque derivatives. As a result, taxpayers committed $700 billion to the bailout of the financial industry via TARP, and some of the largest recipients were the biggest proprietary traders. By requiring that any proprietary trading occur outside of the federal safety net, the newly adopted Volcker Rule will ensure federal dollars are not used to protect this type of risky trading. Doing so will protect the U.S. economy from suffering another debilitating financial crisis and will ensure taxpayer dollars are never again used to rescue failed financial firms. But now my Republican colleagues seek to erect roadblocks if and when the banking regulators, the CFTC, or the SEC decide to make any necessary revisions to the rule by requiring them to consider whether the rule mandated by Congress would promote efficiency, competition, and capital formation. Not only do these considerations conflict with safety and soundness goals of the rule and prudential regulation, they also second-guess Congress's mandate. What's more, H.R. 3913 appears to be yet another attempt to impose an economic consideration obligation on our federal financial regulators to subject them to lengthy and resource-intensive legal challenges, a tactic that is likely intended to prevent, delay, or weaken any rules implementing the Dodd-Frank financial reforms. Worse, by subjecting our regulators to increased administrative burdens and judicial review now, 7 months after the Volcker rule was finalized, this bill perversely incentivizes the agencies from avoiding these hurdles by declining to make any future changes to the rule, no matter how necessary. This disincentive for regulators to make changes to the rule is odd, since this committee has urged regulators to move swiftly to make changes to Volcker when the industry has raised legitimate concerns, including the Trump CDO issue and the issue related to collateralized loan obligations. I believe this bill is absolutely wrong-headed and would urge my colleagues to oppose it. I yield back the balance of my time.
Gentlelady yields back. For what purpose does the gentleman from Missouri seek recognition?
Strike last word.
Gentleman is recognized for 5 minutes.
Thank you, Mr. Chairman. I certainly support the gentleman from Wisconsin's bill here. I think if you stop and think about what we do in the private sector, you always sit down and do an analysis of whether you want to go forward with whatever enterprise, whatever expansion, whatever change you want to make in your operation to see if it's cost-benefit wise for you to do so. And you try and sit there and figure out the unintended consequences of your actions. And so why would we not want the federal government to go in and do a cost-benefit analysis to see once if it's going to be, number one, cost-effective, and number two, to see what the unintended consequences of that action may be? It only makes common sense because as regulators quite oftentimes are not people who live or have worked in the real world. As a result, they may be well-intentioned, but their actions can have certainly devastating consequences, unintended may they be. And so why not allow for a discussion, a survey, an analysis of what may happen to be able to be part of your decision-making process? It only makes sense. Oh, I forgot we're working with the federal government. Shucks. With that, I yield back, Mr. Chairman.
Would the gentleman yield?
Yes, I'll yield.
I appreciate the ranking member's comments on our bill, but to say that a cost-benefit analysis is wrong-headed, especially when it will potentially cost $4.3 billion, and we all know those costs are passed on to the American consumer. Listen, I think this is the right thing that should be done, and this is not retroactive. This is any changes that are made moving forward. I think we have to acknowledge what appears to be a very simple rule, and I think most of us would agree with the concept behind the rule that we don't want banks taking risk for their own profit with federally insured money. That's a good thing, but it's not simple. It's not simple because it's taken a 932-page rule to try to articulate the guidelines between proprietary trading and market making, and it's very difficult to do. And because it's so difficult and because it can be so costly, I think it only makes sense that we should do a cost-benefit analysis moving forward. And that we would say that we're opposed to that. I have a hard time wrapping my head around it. If it was simple, not complex, we want all barriers moved out of the way of these regulators. Because of its simplicity, that is one thing, but this is not simple. And when it can have great impact on the system, it only makes sense that they take the time and see what the intended consequences are, and as my good friend from Missouri mentioned, the unintended consequences are of this action. And frankly, I thought they should have done it when going through the first rule. They didn't because they claimed they didn't or weren't required to. We made we gave some pushback on that. The SEC did have a requirement, and so did I believe the CFTC. So moving forward, hopefully we can get some bipartisan common sense analysis if there's changes to this rule. I yield back to the gentleman.
I yield to the gentleman from Colorado. Oh, okay. I yield back to the chairman.
For purpose, gentleman from Colorado seek recognition.
Move to strike the last word.
Gentleman is recognized for 5 minutes.
And I appreciate the comments of my friend from Wisconsin about needing common sense. This is not the bill that has common sense. We lost. This country lost. You know, I've noticed the chairman running his debt clock. But the country, in a space of about 1 year, lost about $17 trillion of wealth in the stock market and housing prices alone. Forget about the misery and the revenue loss to all the people who lost their jobs in the last 6 months of the Bush administration. Those policies are what then caused us to have to take some steps to put regulation back in the system and not have a Wild West atmosphere in derivatives, in proprietary trading, in things that when they fail in a huge way, and millions of people are hurt. So I would say to my friend from Wisconsin, if you want to do a cost-benefit analysis, you take those trillions of dollars of wealth that were lost, that's taken 5 years to regain. That should be your cost, and your $4.3 billion that you say this regulation may cost is peanuts compared to the losses this country suffered in 2008 and 2009. I would also say to my friend, it's peanuts compared to the $24 billion that this country lost when there was a government shutdown led by the Republican Party last fall. I have no idea what the cost is going to be of the blank check that apparently the Republican Party is going to give to its lawyers to sue the president tomorrow or Thursday. So I appreciate the gentleman saying $4.3 billion for this regulation potentially is a lot of money, and it is. But in comparison to what we lost, it's not much compared to the trillions of dollars lost and the misery sustained by Americans, and we need to be able to prevent that from happening again by these various tools that multiplied the losses.
Will the gentleman yield?
Yes.
Up here.
Oh, is this to my friend, Mr. Garrett?
Yeah.
Yes, and don't be surprised if I cut you off.
Well, first of all, I was going to commend you.
Okay, yeah, keep going.
I was going to commend you that you made it almost to 11:30 during this hearing before you blamed President Bush for something.
No, I did that much earlier.
Oh.
You were not here for that. I did it much earlier.
Let the record show it was 10:19.
Did I miss that? Sorry to hear that. Not really. So I understand the balance issue from your perspective. On the one side, as you put it, there's literally trillions of dollars that we've lost in untold suffering. That's over here.
Correct.
On the other side, the $4 billion or the $3 billion or what have you. So is it your position that then we should never look to see what the cost is on regulation, on the burden of business, and so on and so forth? Because realistically, we're never going to have a bill that costs $1 trillion.
Claiming my time, I would say absolutely not. That is not my position. That in fact...
Speak a little closer to the microphone, please.
Well, I'm talking to my friend from New Jersey. So...
and we all want to listen intently.
Thank you, Mr.
So
Chairman.
I would say to the gentleman, no, you do need to look at costs and benefits. I agree with that. In this particular context, in Mr. Duffy's bill, he disregards how we got here in the first place. He disregards, in his bill, the fact that we did suffer tremendously because of not taking into consideration the proprietary trading and the multiples that were lost as a result of derivatives.
Would the gentleman yield?
To my friend from Wisconsin, yes,
Thank you.
I will.
No, I'm not disregarding the losses and the role of proprietary trading. What I'm trying to do here is say, listen, it is, I think everyone has acknowledged the difficulty in determining what is proprietary trading and what is market making. That isn't easy, and Republicans and Democrats have acknowledged it, and the point is a 932
Reclaiming
bill.
my time, sure. I think the gentleman has a point, but that isn't what your bill says.
Oh, but it
and
is.
So, no, it's about everything's got to be done in cost benefits. It doesn't talk about how you define market making versus something else. That isn't what your bill says. Not the way I read it, but I would yield back to the chairman the balance of my 3 seconds.
Time of the gentleman has expired. The chair recognizes himself now for 5 minutes. This just continues to be an absolutely surreal debate to me. It has taken place before. It's taking place now. It will probably take place in the future. To say that we should have no interest whatsoever, what the ramifications of a rule is upon our constituents, upon low and moderate income people, that we would somehow not want to know this. No, let's take our voting cards and let's give it to the unelected and unaccountable, and then whatever we do, let's not look over their shoulder, and let's never look to see what the impact is on our constituents of what they are doing. To say that you do not believe in cost-benefit analysis is saying, you know what, if the cost is that low and moderate income people have to pay more, I'm not really interested in that. If the cost is that there are numerous mid-sized companies that have to pay more for the financing and thus they create fewer jobs, no, I don't want to know that. That just clouds the issues. Again, it's all about purported benefits never being measured against actual benefits, much less actual cost. I mean, I just never ever thought in the years that I have served on this committee that we would not want to know how these actions taken by regulators impact our constituents. Again, it is an absolute surreal moment to me. These fees largely end up getting imposed upon the people who can afford them the least. And then we know, again, since this has arisen from Volcker, here we are 4 years later, and it's still absolutely, the rule defies the understanding of mankind. Nobody today can still draw the line between market making and proprietary trading. And oh, by the way, it was the financial institutions that had a diverse revenue stream that were better able to weather the storm. We've even had the Secretary of Treasury and the Chair of the Federal Reserve get before us and say, well, no, proprietary trading was not at the heart of the financial crisis. Instead, it had everything to do with the erosion of traditionally prudent underwriting standards, much eroded by those who wanted to roll the dice on affordable housing, cared less about safety and soundness. So again, this is a very modest proposal of the gentleman from Wisconsin, somewhat narrowly tailored, I might add. I would hope that we would add some type of form of cost-benefit analysis to all rulemaking. Still, again, another surreal moment, the President himself, who I'm always hesitant to agree with, has certainly endorsed cost-benefit analysis throughout other portions of the federal government. So why we want to be ostriches and put our heads in the sand and say we refuse to look at how Volcker, much less any other rule, is impacting those who need jobs, those who are struggling to pay their bills, it's simply beyond me. Simply beyond me. So I'm disappointed. This apparently is not going to be one of our kumbaya bipartisan moments. But I'll let my friends on the other side of the aisle defend to their constituents that they seemingly are indifferent as to the knowledge of whether or not their constituents are being hurt. So I will stand with the gentleman from Wisconsin. I would urge all of my colleagues to support his bill today. Yeah, I'd be happy to yield to the gentleman from Wisconsin.
Just to expand on your point and expand on the gentleman from Colorado's use of not just Bush but Obama, I believe it was Executive Order 1356-3 that requires all agencies to undergo a cost-benefit analysis. If it's good enough for President Obama to put in an executive order, hopefully it's good enough for my friends across the aisle to agree with moving forward with any new modifications to the Volcker Rule. With that, I yield back.
Will the gentleman yield?
It's my time. I'd be happy to yield to the gentlelady.
Thank you very much, Mr. Chairman. I'm a little bit confused by some of the statements that you just made, and I think I remember you told the Wall Street Journal we need to strengthen the firewall between investment banks and retail banks. What have we done?
My time has expired, but I feel quite confident somebody on your side of the aisle will yield
I
to
don't want to
you.
misquote the.
For what purpose? Well, my time has expired, therefore I cannot yield.
Move to
But I
strike the
look
last
so
word.
forward to hearing what else you have to say.
Move to
What
strike.
gentlelady from Wisconsin moved to strike the last word. Gentlelady is recognized for 5 minutes.
I would like to yield to the ranking member.
Thank you very much for yielding. In addition to the quote that I was reminding the chairman of, I think we ought to correct a few things. We heard today that the Volcker Rule is a 900-page rule. That's simply not true. The Volcker Rule is a 70-page rule, and all of the remainder of what he may be referring to is dedicated to responding to industry concerns, including considering the rule's impact on various economic consequences. And this other thing about benefit analysis, as Chair White has stated, the economic expertise of staff was crucial in developing the rule. Also, the OCC did conduct cost analysis of the rule, as Mr. Duffy pointed out. This is, of course, again, we know that the Volcker Rule was extremely controversial, and we know that there was a big pushback, and it continues to be so. We also know that cost-benefit analysis has been used in more ways than one to simply complicate the ability for our regulators to get their jobs done. Tie them up, put them in court, do everything that you could do to deny the ability to oftentimes move forward. This idea that every time the regulators working with industry decides that there should be some modifications or changes in order to make the Volcker Rule work, you have to do a cost-benefit analysis is absolutely simply the trick and the tools that are used to ensure that they're not able to do their job because they're getting tied up with cost-benefit analysis one more time. And so with that, I would yield back to the gentlelady.
Thank you. I'd like to yield to the gentleman from Colorado.
And I thank the gentlelady from Wisconsin, and I would say to my other friend from Wisconsin that if in a cost-benefit analysis you do look at the losses the country suffered as a starting point, then the $4.3 billion against the trillion, 17 trillion just in home prices and the stock market, and do that cost-benefit analysis, then you look at how the economy has done since Dodd-Frank, since this Volcker Rule, when the stock market has gone to new heights, home prices have returned, jobs, we're gaining about 240,000 jobs a month as opposed to losing 800,000 jobs a month. If those are the kinds of numbers that go into your cost-benefit analysis, then okay, but I think it's a foregone conclusion that we ought to keep proceeding in the manner that we are. So it's always about the calculation, and before we lost a lot and people suffered a lot, and I would agree with the chairman to not understand that is surreal. And since then, people are getting back to work. Their home prices are coming back to where they were, if not moving forward. And we've seen people who were fortunate enough to have IRAs, those things have rebounded, as have, jobs across the country. So with that, I'd yield back to the gentlelady from Wisconsin.
Would the gentlelady yield?
Yes, I will.
Thank you. So is my good friend from Colorado saying that if we include all these numbers, which I'd be happy to do, that you would support my bill for a cost-benefit analysis? I think that'd be fantastic. And again, we should go in to these rules with full knowledge. As I think the chairman said, why put our heads in the sand? I'm not saying it's all bad. I'm not saying it's all good. But let's look at this and have a clear vision of what we're doing so we know if we're making good rules, bad rules, or some good, some bad. But to say that not knowing is the best way to move forward, I don't think that makes sense. I'm not saying that Volcker won't be the next best thing since fried bread. I don't know. But let's do that cost benefit so we can actually...
Reclaiming my time. Gentleman from Colorado.
So would the gentleman let me write the calculation as to the cost benefit analysis? Was that a yes?
Well, I don't have the time, so I would...
You got 10 seconds.
Listen,
I yield to you.
I think we should include everything into the cost-benefit analysis. Let's take a full view of the landscape and move forward. And if you're willing, you can join me. Full knowledge.
Time of the gentlelady has expired. Are there any amendments? For what purpose does the gentleman from North Carolina seek recognition?
I'd like to strike the last word.
The gentleman's recognized for 5 minutes.
Mr. Chairman, I'm just amazed by this conversation today. You know, we're in a very weak economy. There's 20 million people who are underemployed or unemployed. We've heard figures of maybe 250,000 new jobs a month. My goodness, when we cut regulations in the 1980s, we had 400,000 or 500,000 new jobs a month. 1 month, 1 million new jobs. What we've seen is just an excessive burden of new regulation that's come through Dodd-Frank and through the Obama administration. This is another example of what we're trying to do to take this pendulum and bring it back, something reasonable. This is very reasonable legislation that would provide a cost-benefit analysis of these regulations. And I fully support the legislation and thank Congressman Duffy for his work. I yield back.
Gentleman yields back. Are there any amendments? If there are no amendments, without objection, the previous question is ordered. The question occurs on reporting the bill favorably to the House. Those in favor say aye. Aye. Those opposed say nay. In the opinion of the chair, the ayes appear to have it. The ayes have it, and the bill, a recorded vote has been requested. Those in favor of a recorded vote will raise their hand and be counted. A sufficient number having raised their hands, a recorded vote is ordered. Pursuant to subsection C5 of Rule 3 of the committee rules, the vote on this question is postponed. Pursuant to notice, I now call up H.R. 4329 for purposes of markup and move that it be reported to the House with a favorable recommendation. The clerk will report the bill.
H.R. 4329, to reauthorize the Native American Housing Assistance and Self-Determination Act of 1996 and for other purposes.
Without objection, the bill is considered read and open to amendment at any point. The chair recognizes the gentleman from New Mexico, Mr. Pierce, the sponsor of the legislation, to offer an amendment in the nature of a substitute. Without objection, the amendment... I'm sorry, does the gentleman have an amendment at the desk?
Yes.
We'll pause for a moment and allow the amendment to be... It's on the dais. Apparently it's already on the dais. So the clerk will report.
Amendment offered by Mr. Pierce. Section 1, short title, table of contents. A, short
Without
title,
objection, the amendment is considered read and will serve as base text for purposes of amendment. The gentleman is recognized for 5 minutes in support of his amendment.
Thank you, Mr. Chairman. The Native American Housing Assistance and Self-Determination Act was first signed into law in 1995. This 5 years reauthorization bill was conceptualized not to simply be another federal subsidy for Native Americans, but rather a transformative alteration in the living condition and housing opportunities for tribal members. The amendment in the nature of substitute does not only reauthorize the critical bill, it's providing housing for Native Americans across the country. We're also attempting to continue Nahaza's tradition of transforming housing programs. We do so by capturing market efficiencies and the effectiveness of streamlined processes to ultimately achieve prosperity that has been elusive on reservations. I would like to thank my counterparts on the Democrat side of the aisle, Congresswoman Gwen Moore and Congressman Denny Heck. They and their staff have worked tirelessly to make the reauthorization a truly bipartisan effort that achieves many of the reforms requested by Native American tribes nationwide, aimed at reducing the regulatory burdens and expanding opportunities in Native housing. These reforms will achieve more efficient use of taxpayer money and allow approval of the projects to move more quickly, allowing tribes to focus money and resources on development and innovation instead of administrative requirements and ultimately providing more families with homes. I would like to also commend HUD for truly embracing the need for more accountability, transparency, and increased self-determination among Native Americans. Their willingness to engage my office, my counterparts across the aisle, and the committee has allowed us to create a more complete product. In short, Title I deals with block grants, requirements, Indian housing plans, environmental reviews, and requests for total development costs that exceed 10%. In the discussions with tribal housing councils, there was great frustration with HUD for long delays and, in extreme cases, failure to give answers. Each subsection incorporated a process that deemed approval if the Department failed to give timely answers. As you can guess, HUD, in recognition of the deficiencies, devised its own language instead of the deemed language. The committee members agreed to those suggestions for accountability and reporting back, and we dropped the deemed language. Title II applies to the affordable housing activities. In one of the most sought-after requests, Native Americans and tribal companies under language in this bill have greater opportunities for employment on tribal housing projects. One section that has had much discussion is waiving the maximum rent requirement if a tribe has its own written policy. Another change is to allow tribes flexibility when low-income families convert to home buyer lease to purchase status. In one of the most compelling changes, tribes are allowed to use funding from Indian Health Services to construct sanitation facilities. Title III covers the allocation of grants. This section reauthorizes NAHASDA at $650 million, which is the same level as last year and in the last authorization. Additionally, in this section, the President requested a very aggressive recouping of unexpended funds. The agreements reached in this title is more accommodating to tribal needs, allowing more room for tribes to work through balances while meeting the President's request for efficiencies in the system. Title IV covers compliance, audits, and reports. The Secretary has agreed to new requirements to give a timely response to inadequacy reports his agency files, and also to report to, includes a requirement to report to Congress. Title V sets up a process which tries to alleviate homelessness among Native American veterans. Title VI provides for status quo in the Cherokee Nation limitation. This section also allows for a long-term 99-year lease on tribal lands. This one provision should overcome one of the greatest obstacles for tribal members to get personal loans to build private houses on reservations. Title VII, finally, is a demonstration project that is designed to attract private funding sources and developers to invest in housing projects on reservation. The objective is to put more Native Americans in houses and work through the backlog of needed houses in numbers never seen before on reservations. Anecdotal quotes declare this section to be transformational as it moves forward. NAHASDA was designed to promote development, increase flexibility so that tribes may meet the unique challenges that they face and provide the self-determination that tribes deserve. I request that all members support the bill and again thank the Chairman for the opportunity to present. Yield back the balance of my time.
Time of the gentleman has expired. Who seeks recognition? For what purpose does the gentlelady from Wisconsin seek recognition?
I'd like to move to strike the last word.
Gentlelady is recognized for 5 minutes.
Thank you, Mr. Chair, and I want to join my good friend and colleague, Mr. Pierce, in recognizing that this, while there may not be 100% agreement with the final product, I do want folk to know that the process has been bipartisan. And certainly he has mentioned the involvement of Mr. Heck, but I would also like to say that Mr. Kildee on this committee has been very involved, as well as members on the Resource Committee, Mr. Young and Ms. Hanabusa have been involved, and of course, also in the House, Mr. Cole. So when we say bipartisan, it's not just that one person you can find from the other party so that you can call it bipartisan. It has been a bipartisan process, both from the member-to-member level as well as our staffs. This is what I think our constituents want. I appreciate the walkthrough that Mr. Pierce has given us, so I don't have to repeat much of that. I think when we get into the discussion and the amendment process, we'll have more opportunity to discuss it section by section, or those sections where there is not a 100% agreement. But I do think there is agreement that Native people are in dire need of housing, in dire need of this committee to respond to the tremendous need, whether they are in Wisconsin, Alaska, Oklahoma, Hawaii, wherever indigenous people live. They need us to do due diligence to make sure that they can live a minimum decent quality of life. I do want to thank the chairman for allowing us to have this markup. I want to thank the ranking member who's worked very closely with us on making sure that that the full committee is apprised of parts of the bill that we ought to pay closer attention to. And with that, I would yield my time back.
Gentlelady yields back. For what purpose does the gentleman from Texas seek recognition?
Move to strike the last word.
Gentleman is recognized for 5 minutes.
Thank you, Mr. Chairman, and I want to thank the gentleman from New Mexico, Mr. Pierce, for his tireless work on this issue. He's spent a lot of time visiting with a lot of the stakeholders, and I think he's put together a very thoughtful bill. You know, the things that I think Mr. Pierce pointed out about this bill is that it does recognize the sovereignty of the tribes, but also important to letting them have more self-determination of what kinds of housing needs and housing programs that best meet the needs of those particular tribes on those particular reservations. I think some of the things that were encouraging to me was the pilot project that the gentleman has put into this bill to allow for private parties to come in partnership on housing. We've seen that in the military on some of our air bases, and that's been a very successful program. I think also the making sure that the funds are being expended is important. These money doesn't grow on trees around here, although sometimes we spend it like it does. But the gentleman has put a very thoughtful recoupment in there for where projects are not being funded. And then I think the expediting of a number of those provisions where if the HUD is not responsive and they're deemed that these projects are approved at that particular time, and also some of the environmental provisions in there of not sometimes these projects, whether it's housing or water projects or others, get bogged down with environmental issues that are detrimental, and so you spend a lot more money working on environmental issues that bog those projects down, take a lot of time, and take a lot of money. So again, I am appreciative that this is a bipartisan bill, and I would encourage my colleagues to support this important piece of legislation, and again, thank the gentleman from New Mexico for all of his work on this project.
Would the gentleman yield to the chairman?
I would yield to the chair.
I thank the gentleman for yielding. Allow me to, I guess, pile on. I, too, want to thank the gentleman from New Mexico for his leadership. He has worked tirelessly and for quite some time in crafting this piece of legislation. As the gentlelady from Wisconsin acknowledged, the gentleman from New Mexico did reach to the other side of the aisle to try to craft this legislation. And I know that consensus was reached on a number of matters, perhaps not all matters, but the gentleman from New Mexico has been known as a tireless advocate for his constituents, his Native American constituents. I want to thank him for the innovations that he has brought into this legislation that I think can really help both Native Americans and taxpayers as well. So a number of innovations, more accountability, and again, the gentleman from New Mexico has shown outstanding leadership, and I would encourage the committee to support his efforts. With that, I yield back to the gentleman from Texas, who apparently yields back his time. For what purpose does the ranking member seek recognition?
I move to strike the last word.
Gentlelady is recognized for 5 minutes.
Thank you very much. Mr. Chairman and members, this is one of those bills that you regret having to indicate your opposition to, because you know that everyone who's worked on the bill have done so and done so in good faith. And Mr. Pierce did talk with me on several occasions about this bill. He wanted to skip the hearing process. I was always skeptical about that. We find ourselves here today with the markup without going through that hearing process. Ms. Moore has worked on this bill with him, and Mr. Heck, I think, has been involved in the bill. And so I'm just sorry that I have to oppose the bill because I do support the reauthorization. So we are now considering the reauthorization of the Native American Housing Assistance and Self-Determination Act, or NAHASDA. And you know, I think we should probably have gone through regular order. NAHASDA is a current system through which the federal government provides housing assistance to Native Americans and Native Hawaiians. These groups experience some of the poorest housing conditions in the nation, as well as unique barriers to housing due to the legal status of tribal lands. NAHASDA provides housing assistance to these groups in the form of both a block grant and a loan guarantee program that is tailored to address their unique needs while respecting their right to self-determination. And so, again, while I support reauthorization of NAHASDA, the legislation for us today includes several provisions that I have trouble with. Among the many problems of this bill is the issue of the Cherokee freedmen, and that is of particular concern. And I know that many members would not be interested in this history, but it is a history, and it's a struggle that many in the Congressional Black Caucus have been involved in for a long period of time. And the last struggle was led by Mr. Mel Watt. The history is this. The freedmen are descendants of African American slaves formerly held by the Cherokee. Over the past several years, the Cherokee Nation has been trying to expel the freedmen from tribal membership. But in the face of this tragic discrimination, we have not gotten any support from the opposite side of the aisle. They have refused to include language that would offer protection for the Cherokee freedmen. I, for one, have difficulty supporting continued silence on this issue and will not support the bill unless it is amended to grant the freedmen the justice they deserve. Furthermore, this bill would seriously undercut the central goal of providing affordable housing for low-income Native Americans. Specifically, this bill would waive the 30% maximum rent requirement for Native American tenants. Without this critical tenant protection, low-income Native American households will be vulnerable to unlimited increases in rental payments. And while I understand that tribes are working with tight budgets, extracting more money from low-income households by burdening them with unaffordable rent payments is not a solution that I can accept in any context. Now, and what bothers me about waiving the 30% is we have in law 30% for public housing, Section 8, what have you. And if we undermine that with this legislation, we will open up the possibility that the 30% will attempt it to be waived in other areas of the law. And lastly, this bill includes a new demonstration program that moves toward increased privatization and deregulation of tribal housing activities. Tribes that participate in the demonstration would be granted exemptions from several requirements under NAHASA, including many important tenant protections, again, such as a 30% maximum rent requirement and lease requirements for assisted units. I'm very concerned about the negative implications that this demonstration program could have on low-income Native American households in participating tribes. So I'd like to sincerely thank Mr. Moore, Mr. Heck, and Mr. Kildee for their efforts to reach a bipartisan agreement on this bill. And while I cannot support this reauthorization in its current form for all of the reasons I have stated, my colleagues and I will be offering several amendments that will address our concerns. I hope they are adopted so that we can continue to provide critical housing assistance to Indian country. Thank you, and I yield back the balance of my time.
For what purpose does the gentleman from New Jersey seek recognition?
Strike the last word.
The gentleman is recognized for 5 minutes.
Well, thank you, Mr. Chairman. At this time, I'd like to yield to Mr. Pierce.
Thank the gentleman for yielding, and appreciate the comments that are offered by the ranking member. But first of all, I'd like to join my colleague, Congresswoman Moore, for recognizing the efforts of Mr. Kildee, Mr. Young, Ms. Hanabusa, and the ranking member in this process. To the statement that we should have gone through regular order, as you know, juggling the many different tribal inputs across the country, our own differences between the different sides of the aisle ate up a lot of the 2-year period, and this is simply a matter of trying to get this bill reauthorized before this Congress runs out. We're down about 30 days to get it to the floor, get it across to the Senate and back, and so it's surely a matter that the process took a very long time, and we started on it right at the beginning of the 2-year Congress. Secondly, as regarding the Cherokee Freedmen, the language that we actually used is exactly the language that was approved by everyone, almost everyone that sits on this committee. Actually, it was a kind of a compromise that was put in the nature of an amendment by Representative Boren from Oklahoma, and that ultimately was put into the bill, was voted on the floor by 221 members. I'm sorry, 333 members, and every member of the committee, with the exception of one who did not vote at all that day, voted for the provision that we have. We simply updated to say that the courts should be the one to determine this, and that the federal courts are currently taking a look at it. As far as the 30% language, as the gentlelady understands, that there's a situation of really unequal treatment on the part towards Indian tribes, that they do not get. There are many indications where people are allowed to go above the 30%, but they receive compensation. So many times the tribal units have to spend their entire authorization, their entire appropriation to do the rent balancing, and that has created an inability to update and to increase the housing stock. So we're just trying to do the things that to give equal treatment to the Native Americans. And finally, on the demonstration project, the idea that we could use future streams of payments the same way they were used on military bases, to not build one house or two houses a year, but to build 100 and 200 houses for different tribes, is transformational. That's the word of the Indians to me. That's the word of different tribes saying, if this proves up, and I'm not sure anyone is going to opt in. It's easy to opt in. It's easy to opt out. It's totally voluntary. But to describe potential negative impacts when we might use market forces to come in and revamp entire sanitation systems, entire sewer systems, water systems, I just really am puzzled to try to figure out the objection to that when we might put more people into houses today and just use these funding streams to pay the development cost downstream. To me, it was a way to start putting more Native Americans into their own homes today than has been done in the entire period of the authorization since 1996. And so for us, it was an opportunity to run a pilot project and see if it works. If it does, it will absolutely transform Native American housing, and that's what I'm after. My own family began its work out of poverty through home ownership. Our first home was $1,500. In fact, the first one was $800. And so it's not like we began kind of at the top of the ladder. We started at the very bottom and worked our way up, and I hear from Native Americans they would like the same opportunity. So this bill has that demonstration project, which for the first time begins to open the door on reservations. Prosperity on Native American grounds is something I think everyone would support. I would thank the gentleman from New Jersey for yielding, and just wanted to clarify the positions on the lady's comments and objections to the bill, and I appreciate her viewpoint, but wanted to answer and yield back.
And I yield back.
Time of the gentleman has expired. Are there any amendments?
Yes.
For what purpose does the ranking member seek recognition?
I have amendments at the desk.
We'll pause and allow the amendment to be distributed. Is there any amendment, rather any member who has not received the amendment? The clerk shall report.
Amendment offered by Ms. Waters, strike Section 602 and insert the following new section.
Without objection, the amendment is considered read. The gentlelady is recognized for 5 minutes to explain her amendment.
Thank you very much, Mr. Chairman. My amendment is designed to end a generation of injustice suffered by the Cherokee freedmen by sending an unequivocal message to the Cherokee Nation that they cannot continue to discriminate against the freedmen without serious consequences. Specifically, it would replace Section 602 with stronger language preventing the Cherokee Nation of Oklahoma from receiving any benefits or funding until the tribe is in full compliance with the Treaty of 1866 and rightly recognize the freedmen and their descendants as citizens of the tribe. The Cherokee freedmen are the descendants of former African American slaves of the Cherokees. The Cherokee Nation was once a slaveholding tribe. However, in the aftermath of the Civil War, the Cherokee Nation signed a treaty with the United States promising to give freedmen all the rights of Cherokee citizenship. After generations of intermarrying, most of the Cherokee freedmen today have Cherokee blood. But for the past several years, the Cherokee Nation has been attempting to expel the freedmen from its citizenry, which would effectively leave the freedmen without the right to vote, without access to critical services, including health care and housing. When the previous reauthorization of NAHASA passed, action on this issue was delayed until a relevant tribal court case had been settled. Now that the tribal court case has been decided against the Cherokee freedmen, this bill seeks to punt the issue yet again while federal litigation is ongoing. I believe that Congress has remained silent on this issue of fundamental discrimination long enough. The fate of the freedmen should no longer be left solely to the courts. Congress has an opportunity to protect them now. We must send the unequivocal message to the Cherokee Nation that failure to provide full citizenship rights to the Cherokee freedmen will have severe consequences. This is an issue of fundamental rights. It's an issue of discrimination, and it's an issue of basic human fairness. Mr. Chairman and members, I happen to be African American. I happen to be concerned with the history of my people in the world. And I cannot disregard the fact that the freedmen have their rights protected by treaty. This is a treaty. No one disagrees with the treaty. The treaty was signed. And so these freedmen have a right to all of the rights and privileges that come with that treaty. I know that there are those who have been in the leadership of the Cherokee Nation to deny them that right, but they do not deny the slavery. They do not deny the treaty. And so this Congress could certainly deal with this issue. And I would ask that you support my amendment so that we could honor the Treaty of 1866. It's as simple as that. And I yield back the balance of my time.
Gentlelady yields back. For what purpose does the gentleman from Oklahoma seek recognition?
Mr. Chairman, I seek recognition to strike the last word.
Gentleman's recognized for 5 minutes.
Thank you, Mr. Chairman. And I very much respect the gentlelady's endeavors here and what she's trying to do and the historic perspective. But if my colleagues would indulge me for just a moment, I represent the northwest half of the great state of Oklahoma, and of the 38 Indian tribes we have in Oklahoma, I have the privilege of representing all or parts of 16. We're a unique state in the cultural makeup that we represent, all these different tribal groups from all different regions of the country. Oklahoma came into its present existence because President Andrew Jackson and Congress in the 1820s decided that they valued the property of southern Indian tribes to the point that they were willing to remove them. Many of you are familiar with the term the Trail of Tears, when literally the 5 tribes at gunpoint were extracted and removed from the South and brought to Oklahoma. Now, many of those tribal members were like their non-tribal neighbors. They participated in what we know to be the dastardly institution of slavery, but they brought them with them. Now, over the course of time, the Civil War evolved. And the various tribes in Oklahoma, like much of the country, what was called Indian Territory at the time, split and went different directions. Some joined the Confederacy in the cause. Some joined the Union. The Cherokee tribe was not uncommon in that regard. And at the conclusion of the war, Congress did what it always does in a situation like that. It punished both friend and foes, all tribes alike. The aftermath of that, the particular treaty affecting the Cherokees that the good lady from California references, clearly does have requirements about the responsibility of Cherokees towards their freedmen, their former slaves. Some would argue that those responsibilities were greater than perhaps any other former part of the slave-owning society in the United States. But this has been for a long time a major issue of discussion inside the Cherokee Nation. In 2008, as my colleague from New Mexico, who's worked so diligently on this, referenced, there was compromise language, and the ranking member and myself, and at that point Mel Watt, were all members. And the compromise language basically was to say that the temporary order and temporary injunction that had been issued on the 14th of May in 2007 by the District Court of the Cherokee Nation, in effect reinstating the citizenship of the freedmen, as long as that was in place, the resources within the HOSDA would be available to the Cherokee tribe. Now, this process is still ongoing in the courts, and my understanding is that it has advanced to the point where now there is an order by the Federal District Court of the District of Columbia, issued on the 21st of September 2011, that in effect maintains that same citizenship right for the freedmen. Which brings me to my point here. I would suggest to all of my colleagues that the very carefully agreed to compromise of 2008, which reflected an action of the district courts of the Cherokee Nation, it is prudent, as Mr. Pierce has done, to update that to acknowledge the decision of the District Court of Columbia here in our nation's capital. All the language is very clear. If the citizenship status of the freedmen is vacated in the final court action, then the HOSDA resources are not available to the tribe.
Many assume that the courts will ultimately affirm the Treaty of 1866, will affirm the rights of the freedmen, and that will be the end of this issue. But if it does not evolve in that fashion, then the mechanism in the bill is already there to address the Cherokees. So I would simply ask my colleagues, as the court process began in the Cherokee courts, and it is now advanced to the federal courts of the United States, District Court of Columbia here, let's let this process continue. And understand ultimately what we do here does have an effect on how we Oklahomans, Native American, African American, whatever your heritage is, how we interact together at home. Let's let this court case evolve itself out. I'm confident the right decision will be made. That will make it easier for us to continue to maintain our rather uniquely wonderful society and culture at home. Let's not make it more complicated for those of us living in Oklahoma. So with that, I respectfully urge my colleagues to vote against the amendment and yield back the balance of my time.
Time of the gentleman has expired. For what purpose does the gentleman from Nevada seek recognition?
Thank you, Mr. Chairman. I move to strike the last word.
The gentleman is recognized for 5 minutes.
Thank you, Mr. Chairman, and to you and to Mr. Lucas for your comments previous. Respect your perspective as the member, who represents a number of these tribes, and respect your point of view. I do want to speak, though, in support of the ranking member's amendment on this issue and add some additional thoughts of my own. And I also want to say I commend my colleagues on both sides of the aisle for working hard on this legislation. I have 5 tribes in my district, and the underlying bill is very important to addressing the housing assistance needs of our tribal communities throughout our country. But I agree with the ranking member that my colleague Mr. Pierce's bill does not do nearly enough to address this particular provision and the issue of the Cherokee freedmen. If we leave this issue up to the federal courts, as some have suggested, what will happen in the event of an adverse outcome for the freedmen? In that situation, which I certainly hope does not happen, the freedmen would be immediately stripped of several fundamental rights. And I am willing to predict that Congress will not be any more willing to address the issue at that point in time. So this idea that we should just wait for federal litigation to run its course before we as Congress address this issue seems ill-advised to me. This is a group of people with a long and painful history of discrimination, and they deserve justice and equal treatment. The freedmen are currently protected, as you indicated, Mr. Lucas, by a temporary court injunction. But if Congress fails to act, it remains a real possibility that the freedmen will be subject to discrimination once again by the tribe that they call their own. So for these reasons, I support the ranking member's amendment, and I urge my colleagues to do the same. And I'd yield to the ranking member for any additional comments she may have.
I thank you so very much for the support and the statement that you just made. And you basically pinpointed what I think is a significant issue here, and that is this. What if the court decides against the treaty? My colleague is saying that we hope, and he is half confident that. But the fact of the matter is there is a treaty, and that treaty should be honored. And the freedmen should not be left up to the whims of the court to decide whether or not to honor that treaty. The Congress of the United States can do something about that. We can do something about that in this committee today. I would ask again support for my amendment, and I would ask my colleagues to take into consideration that we have come a long way toward addressing the issues of slavery in this country. And I have a responsibility, along with other members of Congress, and particularly the Congressional Black Caucus, to always be focused on what we can do to support human rights, to support freedom, to support justice, and to support the idea that all human beings deserve to be treated fairly. This business of one of the chiefs, and any chief that comes along at any particular time may decide that they do not like the idea that they had slaves. They don't want to admit that they were on the Trail of Tears with them. They don't want to admit the intermarriage and all of that, and decide that they want to push back and they want to get rid of the responsibility to provide all of the services that are available to the Cherokee Indians. Could happen anytime. And so we could put an end to that. We can put an end to that by saying the Congress of the United States of America decided it does not support slavery in any shape, form, or fashion. And where slavery has taken place, we have a responsibility to do everything that we can to make up for the wrongs of slavery and for the denial of human dignity of slavery. And so I would ask for support for my amendment. I yield back the balance of my time.
Gentleman yields back the balance of his time. For what purpose does the gentleman from New Mexico seek recognition?
Move to strike the last word.
Gentleman is recognized for 5 minutes.
I would recognize that the language in this bill, this compromise language, was approved by the 2008 Congress, that everyone who was in this committee at that point voted affirmatively. And so the idea that the language is somehow not befitting this institution is one that needs to be addressed. The Native American Indian Housing Council supports the language in this. Just in a letter received on July the 25th, the Nevada California Indian Housing Association gave strong support to the bill. Northern Pueblos of New Mexico, they've supported the Choctaw Nation. I've got a whole folder full of letters of people supporting this language. Everyone understands and acknowledges the difficult circumstances, but again, the case is still before the United States federal courts, and I just think that that judicial process should work its way through before we make drastic changes in the language that was approved by the 2008, the compromise that was approved in 2008 by the Congress. And I would yield as much time as he might consume to the gentleman from Oklahoma.
I thank my colleague for yielding, and I just simply note once again, looking at the history, give us some credit in Oklahoma and indulge us as we continue to work through these issues. Oklahoma took a different course starting in the 1950s. Maybe it was because of the 38 different tribes represented. Maybe it was because of the former slaves, the African American constituency. Maybe it was because we were one of the last places settled and we had people coming from all different parts of the country. But give us some credit and give us some support in this regard. And I'd note for the record, in the 1950s, when the political leadership of other southern states were going in the wrong direction, we had a governor by the name of Raymond Gary. And Raymond Gary got the legislature to end the Jim Crow school system. Raymond Gary desegregated public education, higher education included. Raymond Gary took us the other direction. That's why we have had a different, we've had such a wonderful place all these years. The Cherokees are working through this. There are issues of tribal sovereignty. There's issues about how the 1866 treaty may have treated them differently than everyone else. But even the tribal courts in 2007 issued an injunction to protect the rights of the freedmen. And that was acknowledged in the bill of that year, of 2008. The federal courts in 2011 acknowledged the rights of the tribal freedmen. I'm not an attorney, and who can ever guess the mind of a federal judge? But the track record so far is preserving the rights of the freedmen. If that does not turn out to be the case, then I think my friends are very justified to aggressively move to address the issue. But right now, the courts are working the way they should. They just should work a little quicker. But I can't do anything about that. Let's remember that in the way this language is crafted, if the rights of the freedmen are removed by some court decision, then the Cherokees are not allowed to participate in NAHASDA. That's an immediate response from the federal government. And there will be time for my friends to address these issues, but let us work through this. Let the courts work. I have faith the rights of all of our fellow citizens will be protected. With that, I yield back to the gentleman from New Mexico.
And I would yield back, Mr. Chairman.
Gentleman yields back. Are there any amendments to the amendment? For what purpose does the gentlelady from Wisconsin seek
Move to
recognition?
strike the last word.
Gentlelady is recognized for 5 minutes.
Thank you, Mr. Chairman. This is a very difficult issue, obviously, and I think that everyone is sensitive to the importance of having justice with regard to this. I can tell you that I do plan to support the ranking member's amendment today. Although I will say that I do have faith in the process. I just wanted to point out that the current chairman of the tribe was in fact elected because of the votes of the freedmen. And there is not as much as a vitriolic relationship among the freedmen and the current governance of the Cherokee Nation. And as my good friend from Oklahoma has pointed out, that we're batting 2-0 in terms of the decisions that have been made on behalf of the freedmen. Obviously, a bird in hand is better than two in the bush. And so I will support the ranking member's amendment. But in the end, I do want to make sure that this bill makes it to the floor. I would yield such time as she may want to consume to the ranking member.
I thank the gentlelady from Wisconsin for yielding time. And I appreciate the gentleman from Oklahoma who recounted some of the history in an attempt to show that Oklahoma was aggressive in getting rid of Jim Crow laws, etc. But we must always be focused on discrimination. And while I have an appreciation for agreements or amendments that have been adopted, 2008, I believe that was when the compromise was reached. Here we are, 2014, and the freedmen are still in limbo. I don't know how long this is going to go on, and I guess the gentlelady from Wisconsin said it best. A bird in the hand is worth two in the bush. I wish I could be as confident as you are that the federal government will do the right thing. I am not so soothed by the fact that if the federal government does the wrong thing, that the NAHASDA will not be available to the Cherokee Nation. I don't want to harm the Cherokees. I want them to get assistance. They need assistance. I want them to get assistance, and I want the freedmen to be treated right. And the only way that we can put some guarantees on this is by the Congress of the United States taking leadership. It does me no good to say that in case the courts do not support the treaty that guarantees the rights of the freedmen, that somehow we are going to harm and punish the Cherokees. I want, again, and I will repeat, the Cherokees to have the advantage and the support of NAHASDA. I want them to do everything that's possible to have a better quality of life, but I want that for everybody. And for any group that has been discriminated against, it is recorded in history, and there is a treaty that gives them rights that's being ignored. I want the Congress of the United States to take leadership, notwithstanding the history of any state, of Oklahoma, any place else. We commend everybody who steps up to the plate and do the right thing. But I want you to know that the right thing to do now is to accept this amendment so that we could move forward in an attempt to get justice for people who have been denied for far too long. I thank the gentlelady, and I yield back the balance of my time.
Gentlelady yields back. Are there any amendments to the amendment? Not. The question is on agreeing to the amendment. All those in favor say aye. Those opposed say no. No. In the opinion of the chair, the noes appear to have it. A recorded vote has been requested. Those in favor of a recorded vote will raise their hand and be counted. A sufficient number having raised their hands, a recorded vote is ordered. Pursuant to subsection C5 of Rule 3 of the committee rules, the vote on this question is postponed. Are there any further amendments? For what purpose does the ranking member seek recognition?
I have another amendment at the desk.
We'll pause for a moment and allow the amendment to be distributed. Clerk will report.
Amendment offered by Ms. Waters, strike Section 202 relating to program requirements.
Gentlelady is recognized for 5 minutes in support of her amendment.
Thank you very much, Mr. Chairman. My amendment would eliminate a harmful provision of this bill that allows tribes to waive the current 30% maximum rent requirement, enabling tribes to raise rents for low-income tenants without any limitation or hardship exemptions. It is woefully unclear to me why we should waive an important and long-standing rule that provides much-needed protection for low-income tenants. This protection within the HOSDA is based upon a policy commonly referred to as the Brooke Rule, a federal housing policy that limits a tenant's rent in public housing and in the Section 8 program to 30% of their income. The Brooke Rule was an important victory for tenants when it was enacted in 1969, and it remains an important tenant protection to this day. 30% is the amount that is considered to be the maximum that one should have to pay for rent without becoming burdened. This threshold is widely accepted as the traditional affordability standard by the housing industry, including the Joint Center for Housing Studies at Harvard and the Center on Budget and Policy Priorities. Without the important protection of the Brooke Rule, housing providers could charge 40, 60, or even a higher percentage of a tenant's income for rent, damaging their ability to afford necessities such as food, child care, transportation, and medical expenses. As the most recent report from the Joint Center for Housing Studies concluded, cutbacks to these necessities made in severely cost-burdened households, quote, seriously undermine the basic well-being of low-income households. I've visited tribal lands, and I've seen the abject poverty that many Native Americans live in. It is outrageous to consider waiving such an important protection meant precisely to protect low-income tenants. Federal assistance, like what is made available under NAHASA, can make a fundamental difference in quality of life for children, families, and adults, but only if the amount they are required to pay under federal law is protected. Without that critical protection, we are undermining the very mission we have set out to achieve in helping to provide stability for people in this country that need it most. It is for these reasons that I cannot support waiving the Brooke Rule and why I am proposing this amendment to strike this provision of the bill in its entirety. Open up this door on the 30% rule, and I believe that we will have an attempt to waive or eliminate it in these other programs that I have alluded to. So I'd ask for an aye vote on this amendment.
Gentlelady, yield back the balance over time.
Yield back the balance.
For what purpose does the gentleman from New Mexico seek recognition?
Move to strike the last word.
The gentleman is recognized for 5 minutes.
Mr. Chairman and Ranking Member, on this particular section, what we're trying to do is bring some sort of fairness, some sort of equitable treatment for Native Americans. In every other housing program, they have this limitation to where rent can't exceed 30%. But if the rent is actually higher, then the difference is made up by the federal government, by a subsidy. That's not the case in Nahasda. So what you have is this 30% requirement that the ranking member is trying to reinstitute without the subsidy. And what this does is it eats up the assets in tribes having to provide the difference between what they are reimbursed and what the rent actually is. And so it eats up their budgets in just simply providing that differential in the rent. And this is a matter of sovereignty. The tribes are saying if we have a program and if we state it and if it has been approved by the department, then we should be allowed to have self-determination. That's what this section is about. And to have someone on this committee say that we're going to hold the Native Americans to a different standard is one that I don't understand. It's one that Native Americans feel very strongly about in my district. I understand that strong opinion they have. I'm representing that strong opinion because I don't understand the lack of fairness. I don't understand the lack of sovereignty that would happen if we remove this section out of it. So I appreciate what the gentlewoman's concern is, but I do not understand the amendment nor the outcome of the amendment and would oppose it strongly. Yield back.
Would you yield to the Chairman?
Yes, I would yield.
I thank the gentleman for yielding. I too wish to urge all members to oppose this particular amendment. One, I would say not unlike the other amendment, these amendments have not been pre-filed. That's certainly the privilege of any member not to do that. I never try to question the motives of members, but I've made it clear on numerous occasions if you wish to have an amendment incorporated into the bill, submit it. If not, if you want to just have messaging, submit it for political debate. That's your privilege. So clearly the minority has had opportunities, chose not to do it. It makes me question just how serious the minority is in having these amendments adopted on a process basis. That'd be my first observation. Second of all, I guess, you know, if we accepted the ranking member's amendment, we ought to change the name of the bill, since NAHASDA, the acronym stands for Native American Housing Assistance and Self-Determination Act. I guess we would just have to take the self-determination out of it. I guess we'd have a pithier acronym, but I don't think we would have a fairer acronym. Again, as the gentleman knows, and he's an expert in these matters, has devoted a lot of his public service to Native American issues. Public housing authorities typically receive operating subsidies to help compensate for the 30% requirement. The Native American tribes do not. That is an important matter of distinction, which means that being subject to this particular rule could mean less investment and modernization, less construction of new units. And again, it cuts completely against the purpose of the Act. And again, the minority, if they don't want to support tribal sovereignty in self-determination in such matters, they have the right to do it. But they should be very open about it and just take the Self-Determination Act out of the language of NAHASDA in the first place. So I would urge a no vote by this committee on the ranking member's amendment. I thank the gentleman for yielding. I yield back to the gentleman. Gentleman yields back. Who seeks for what purposes, gentlelady from Wisconsin, seek recognition?
I move the strike.
Gentlelady is recognized for 5 minutes.
Thank you, Mr. Chairman. I do understand the point that the ranking member is making, and I do think that a better amendment would have been to afford the Native Americans the kind of subsidies that others get, the federal backfill, so that there wouldn't be a double hit on these NAHASDA funds. And I do understand the ranking member's concern about the camel's nose under the tent with regard to allowing this exception. I do think it's important for the going forward to make sure that we are providing enough funds. I mean, as it is, NAHASDA is very, very underfunded, and I think that it would do us all well to make sure that there are more monies than these operating subsidies that are in current law. I would yield to the ranking member.
Thank you so very much for those statements, those comments about the 30%. I'd like to deal with the argument that's been made by the chairman and I think by Mr. Pierce and others. Their argument is, contrary to tribal entities, public housing, Section 8 receive additional subsidies for operating costs and capital needs. Public housing authorities have been underfunded for decades, with insufficient funds to cover their operating costs and capital needs for years. It is simply inaccurate to say that programs like public housing have sufficient assistance to fill the gap that is left after rental income is accounted. Furthermore, tribal entities do in fact have the flexibility to use their block grant funding to subsidize or fully recover operating costs and capital needs. The only difference is that it doesn't come as a separate allocation as do the operating and capital funds for public housing in Section 8. This is because the Native American block grant was designed to be more flexible than those programs. The bottom line is that we should not be attempting to balance the budgets on the backs of the poorest people in this country. Again, the other argument that has been made is about sovereignty. Tribal entities are a sovereign nation and should not be subject to the same requirements as other housing providers. I understand that it is a delicate balance between respecting tribal sovereignty and requiring accountability when it comes to the expenditure of federal dollars. Tribal entities receive millions of dollars in federal housing assistance annually through NAHASDA programs, and at the very least, this federal housing assistance should come with basic protections for low-income tenants. I fully respect the tribal right to self-determination as central to the spirit of NAHASDA, but it does not shake my conviction that we have a responsibility to protect low-income tenants. My colleague, Mr. Pearson, on the other side of the aisle, indicated that somehow we would be treating the tribes differently by not allowing them to have the rule waived for the 30%. To tell you the truth, we'd be treating them differently if we would allow them to do this waiver because we don't allow anybody else to do it. So it would be absolute different treatment for the tribes. So I would just hope that we would respect the fact that the Brooke rule is substantial and it has been great for low-income people, and it's throughout law. We have public housing, we have Section 8, and we shouldn't do any different with the tribes. I would yield back to the gentlelady the time, and I thank you so much. I will yield to the gentleman from
I would
Arizona.
yield to the gentleman from Nevada.
I thank the gentlelady from Wisconsin, and to the ranking member. I just want to add that I think it's ironic that there are some on the other side who say fair and equal treatment, but yet that fair and equal treatment is underfunding the very support for housing assistance that so many of our tribes throughout this country are in need of. When I visit my tribal leaders and talk about their needs, housing is among the top. And so again, I think if this is an issue of fair and equal treatment, and your goal is to undercut public housing across the board for everyone, including the tribes, then you should be more transparent that that's the goal that you're seeking to address. The ranking member has been staunch in her consistent support for public housing,
Time of the gentlelady has expired. For
issue
what
should
purpose
be-
does the gentleman from Texas
She should
seek
not be
recognition?
challenged in that regard.
Time of the gentlelady has expired.
Move to strike the last word.
Gentleman is recognized for 5 minutes.
Yeah. Mr. Chairman, unfortunately, I want to speak against this amendment. I think we're kind of mixing apples and oranges here. One of the things that NAHASDA was designed to do was to give the reservations and the various tribes the flexibility to design their own housing programs. And so as a result of that, they don't do Section 8 housing. And it's been brought up about this 30% rule in other federal programs, but it's also been brought out that when there is a difference between the 30% rule and the market value, there are operating subsidies that are provided for those entities. So what this bill that Mr. Pierce has designed is to give these reservations the various flexibility that they need, and that setting their own income guidelines, setting their own reimbursement guidelines, and building their model around that. One of the reasons that I think, as I understand the history of NAHASDA, was that the reservations were finding it very difficult to try to fit federal programs into reservation management. And so I would encourage my colleagues, let's move and continue with what the design of this piece of legislation is, and that is to give these tribes their sovereignty, let them design their own housing programs. It's a block grant program, and one that I think has been fairly successful. And I think with many of the changes that Mr. Pierce has incorporated into it, has the ability to even be more successful and give these create more housing efficiencies for that. And with that, I would yield the balance of my time to the gentleman from New Mexico.
Thank you to the gentleman from Nevada who characterized what he said we were trying to accomplish in the bill. I take deep offense. But so do the people, the tribal units who had sent us these letters of support, including your own housing council. And so when you use language like that, and here, my friend, I think you should watch the words a little more closely. We're trying to cut nothing to the Native Americans. We're trying to reform a process. We're trying to put people into houses. I just think that you should also understand that a bill was submitted from your side by 2 members of this committee, and it had this same language in it. And so when you characterize what you say we're trying to do from this side of the aisle, I wish you would look more carefully at your words, and I would yield back to the gentleman.
Gentleman yields back. Are there any amendments to the for what purpose does the gentleman from Nevada seek recognition?
I move to strike the last.
Gentleman is recognized for 5 minutes.
Thank you, Mr. Chairman, and I appreciate the comments for all of my colleagues. And to be clear to Mr. Pierce, I am not trying to assert anything more than the statements that were made during the course of this debate. And if there is to be fair and equal treatment for the Native American Housing Assistance and Self-Determination Reauthorization Act, then I think it should come with the amount of support that those tribal leaders indicate they need. I am supportive of the underlying bill, and I know that my tribal leaders and the Housing Council support the underlying provisions. But I have spoken to them and have met with my tribal council and have seen the dire conditions that many of their communities are in and the need for additional housing assistance. And so my point was clear that if we are going to provide fair and equal treatment, it needs to be equitably funded in a manner that supports the Native American people. And in fact, some of their challenges are greater than non-natives, and therefore we should be providing that level of support. So I'm not trying to make this a partisan issue. I support the underlying bill. I believe that members have worked together. I am a new member to this committee, and so I do not necessarily associate myself with previous bills. I support myself with the positions of my tribal council and those leaders in my community who have said that there is inadequate support for the housing assistance and self-determination provisions of this legislation. So I just wanted to clarify my position so that the record is clear, and I would yield to the ranking member.
Thank you very much. I certainly appreciate the gentleman from Nevada and his knowledge, his concern, his background on this issue. Those of us who are working very hard for justice for the tribes appreciate you. We understand exactly what you have said. I really don't think there's any reason for anyone to be resentful, and I too support the reauthorization, but we have a responsibility to raise questions, even when we're supportive of reauthorization, about aspects of any piece of legislation that we disagree with. And you have done that in a most respectful way, and I just want you to know that I'm thankful and appreciative. And no matter what happens with this bill, we have a responsibility to keep on trying in every way that we can to ensure the kind of justice and the fair treatment that you have spoken to today. I yield back the balance of my time.
Would the gentleman yield?
I will.
I just wanted to say I appreciate your clarifications of that position and would accept that. I know that we're after the same things here, and the discussions get energized and lively, and I appreciate your.
Reclaiming my time, I appreciate the gentleman. I appreciate your hard work, and I hope that we can work together in the future on other legislation that continues to respect the sovereign role of tribes throughout our nation, and to also ensure that they are being properly supported in these types of areas, including housing assistance. So thank you for your work, and thank you, Mr. Chairman, and to the ranking member.
Gentleman yield back. Gentleman yield back. Balance of his time. Gentleman yields back. Balance of his time. Are there any amendments to the amendment? Seeing none, the question is on agreeing to the amendment. All those in favor say aye. Those opposed say no. No. In the opinion of the chair, the noes appear to have it. The noes have it, and the amendment is not agreed to. Are there any other amendments? There being no further amendments, without objection, the previous question is ordered.
I have an amendment at the desk. I was just lulled by the kumbaya at the end there.
We will pause for a moment to allow the amendment of the gentlelady from Kumbaya to have her amendment distributed. The clerk will report.
Amendment offered by Ms. Moore. After Section 502, add the following new sections. Section 503, loan guarantees for Native and Hawaiian housing. Section 184A, J5 of the Housing and Community Development Act.
The amendment will be considered as read. The gentlelady is recognized for 5 minutes to support her amendment.
Thank you. Thank you so much, Mr. Chairman. As I indicated earlier in this markup, I am really proud of the bipartisan process that the path that this bill has taken, and in our initial drafts, the Native Hawaiians who qualify under NAHASDA for block grants and loan guarantees were included in our original language, and in the current substitute amendment, this has been omitted. Now, I know that there is a lot of support among members on both sides of the aisle for inclusion of all Native people under NAHASDA, and I don't understand why it's not been included today. And so I'm hoping that the committee would accept my amendment. Native Hawaiians are indigenous people, just plain and simple. And I know we all think of Hawaii as paradise, so it's really easy to divorce ourselves of the reality that there's a dire need for low-income housing among Native Hawaiians. And the perception of Hawaii as a paradise plays on the word tribe, and it should distract us from the sober debate of this committee. I just want to mention something that that our friend and colleague and ranking member of the Resources Subcommittee on Indian and Alaskan Native Affairs, Representative Hanabusa, said about the inclusion of Native Hawaiians. Quote, "This program is an essential source of funding that not only helps Native people on their own lands, but fulfills a trust obligation created by Congress in 1920 by way of the Hawaiian Homes Commission Act. That act recognized the importance of returning Native Hawaiians to the land to preserve their culture, their traditions, and their values. And the Native Hawaiian Housing Block Grant has helped to facilitate that." Similar to what NAHASDA has done for American Indians and Alaska Natives, the Native Hawaiian title of NAHASDA has opened the door for increased partnerships with financial institutions and enabled the federal policy of self-determination to be extended to all Native populations across the nation, unquote. Now, there may be many of you on the committee who don't have much experience with the Native Hawaiians, so just let me briefly give you a little background. In 1893, the United States government hoped to overthrow the Kingdom of Hawaii, which ended the last time the Native Hawaiians had a formal governing body. Since that time, 150 statutes and act of Congress have specifically recognized the trusted relationship that exists between the U.S. government and Native Hawaiians, which mirrors that of continental and Alaskan tribes. And I will conclude by reading a few lines from just one of those 150 acts of Congress, the findings of the Native Hawaiian Healthcare Act. Quote, "Native Hawaiians comprise a distinct and unique indigenous people with a historical continuity to the original inhabitants of the Hawaiian archipelago, whose society was organized as a nation prior to the arrival of the first non-indigenous people in 1778. The Native Hawaiian people are determined to preserve, develop, and transmit to future generations their ancestral territory, their cultural identity, in accordance with their own spiritual and traditional beliefs, customs, practices, language, and social institutions." I yield back my time.
The chair was informed that the gentlelady intended to withdraw. Was the chair misinformed?
No, the chair was, I thought maybe there was comment on the other side. But I just, I think that we can work this out as the process goes forward. So I'd like to withdraw my amendment.
Gentlelady withdraws her amendment. Are there any other amendments? For what purpose does the gentleman from Michigan seek recognition?
Thank you, Mr. Chairman. I have an amendment at the desk.
We'll pause for a moment, allow it to be distributed.
Mr. Chairman?
Who
front row
seeks recognition? Gentleman from New Jersey.
Point of inquiry. Do we know if the other side has additional amendments after this amendment?
No, we don't. Apparently, we've got one member saying two amendments. Apparently, they are very small amendments, according to the gentleman from Washington. The clerk will report.
Amendment offered by Mr. Kildee, strikes Section 7 relating to demonstration program for alternative.
The amendment will be considered as read. The gentleman is recognized for 5 minutes in support of his amendment.
Thank you, Mr. Chairman. And let me preface my remarks by commending Mr. Pierce on his work on this legislation. It's important work, and it's work that I know he's devoted much of his time here on the committee to. And I think with few exceptions, I'm very supportive of the approach that you've taken. I think the reauthorization is long overdue, and I commend you for the work on this. I do find some areas of disagreement, some of which we've covered and one of which I'll deal with in this amendment. And simply put, this amendment would strike Title VII, which relates to the demonstration program for alternative privatization authority for Native American housing. And let me explain what my concern with this would be. Tribes already under NAHASDA authority have the ability to enter into agreements with outside private or nonprofit organizations. And I assume behind this, and I can only assume, but I've heard some of the dialogue leading up to this, that much of the interest in this title is to provide opportunity to leverage private investments and private knowledge when it comes to development of housing, which I think is admirable. But as I read the requirements under the Act, there is, I think, significant authority, and just reading directly from the guidelines, that Indian housing plans for an Indian tribe, the recipient tribe shall have the discretion to use grants for affordable housing activities through equity investments, interest-bearing loans or advances, non-interest-bearing loans, a number of areas where, and I won't read the entire section of the Act, but my point is this, is that if there is interest in generating some creative partnerships, it would seem to me the way to do that is to, number one, as other members have said, fully fund NAHASDA so that the leverage that's available, the support that's available is adequate to enter into these sorts of arrangements. But secondly, to provide technical assistance to those grant recipients that may have a difficult time seeing themselves engaging in such programs. The concern I have, I think greater concern I have with this amendment is that it essentially provides a structure that waives many of the important requirements under NAHASDA that would otherwise be applicable to such a grant, and in exchange provides the ability for the grantee to enter into an arrangement with a for-profit entity that guarantees a fixed rate of return on an investment and removes some pretty important provisions. I won't cite them all, but some of the provisions that would no longer be applicable would be lease requirement and tenant selection requirements, requirements that prohibit unreasonable terms and conditions in leases and other agreements, the requirement that the owner or manager maintain housing in compliance with applicable housing codes and quality standards, or a requirement that the owner or manager give adequate written notice of termination of lease. I could go on and on. My point is this. I understand that what we have been discussing up to this point, at least for some members, is a real interest in privatization of this program, of NAHASDA itself. I see this as a step toward this. The other point that I'll make is that, at least as far as I've been able to tell, and I'd be open to information on this, but I have not heard from any of the tribal organizations that I have spoken to that have asked for this sort of a program structure to be permitted. In talking to the folks at HUD, have not heard of any inquiries about waivers to provide this sort of program structure. So what we have is an amendment that I understand to be a step toward a larger goal of privatization, but it essentially would reduce many of the protections that are written into NAHASDA, that are included in the main body of the law, presumably for reasons that are of merit, and would waive those requirements in exchange for a structure, a deal structure, that would use federal support to guarantee private profits at the potential expense of the development of affordable housing, which is the intent of the law in the first place. I'm all about trying to incentivize innovation and creativity in the housing sector. I spent a good deal of my own career working on that, and I just think this does not take us there, and for that reason I would ask my fellow colleagues to support my amendment that would strike this.
Time of the gentleman has expired. For what purpose does the gentleman from Mexico seek recognition?
Move to strike the last.
The gentleman is recognized for 5 minutes.
thank the gentleman for his work on the underlying bill and for his support of most of the concepts and treat with respect the concern he has about this Title VII. Basically, what we run into is, I'm sure, the same thing you run into, that tribes get 1 or 2 houses a year, basically out of their appropriation. As I did the math, we've got several tribal units, and so I would ask them, what's your appropriation per year, and what are your needs? And so just using example, one tribe had 200 house backlog, and they're basically getting about 2 houses a year unless they're pulled into that 30% loop in which it decreases down. That's discussion's been had. So I said, on a 30-year time period, for 200 houses, you get about $2 million a year. Times 30 years, that's $60 million. I said, now, do you all put anything in additionally? And they said, yes, about $1 million a year. So now you're at $90 million. You have $90 million over 30 years, and they're building 1 house a year. So then the next consideration was that tribal members may have to pay something from $0 to $500, depending on what their income level is, and so that's another $600,000 or $800,000, but just rounding to $1 million. You're talking about $120 million. So then we used that information going in. We looked at what they did in Department of Defense. They basically got whole new houses. I mean, I was in the Air Force, and the people who lived on base housing, I lived in barracks that were built back in probably the 40s or 50s, and that's the status of housing on military bases. Well, in an 8-year period, 80 or 90% of all the houses on bases were completely torn down and rebuilt with brand new structures, just using that future income stream. So what we tried to do is was not any intent to reduce protection, and I think the gentleman will look closer. There are no requirements that are waived. All we're trying to do is say that we're going to set up a program that will allow tribes to easily opt in, easily opt out. It is totally your decision. And in this case, then we're going to do a couple of things. One of the big obstacles to having anyone lend money on reservations is the 99-year lease. That was taken care of at another point. Then the next obstacle is the repossession. So we say, if you're going to opt in as a tribe, you have to become the first repossessing agent. You don't want people outside the tribe to repossess. You don't want them to have ownership. And so you have to become that agency. But in truth, you know who on the tribe can pay for, which family would be culturally allowed to move into an area, and culturally it would be very difficult. And so the tribes that we mentioned to as we built up this concept were very appreciative. The ones who made comment, and we saw tremendous excitement. I will tell you honestly, I'm not sure there will be one opt-in nationwide, but there was excitement that there is a new way to look at things. It's not our intent to privatize the housing and to take this and put this over here for outside groups to make profit on. What we're trying to do is build a maximum number of houses for the resources given, paired just exactly like it was done on the military bases. Now, one of the things that comes in is that many times groups who are trying to do development, even in sophisticated communities, development groups sometimes get in over their head. And so we visualized just a team that would come from HUD and overlook and make sure there's no exploitation, that they're going to get the sewage systems, the water systems, whatever they need. And so that's this outside group that would come. It would be designated or come specifically from HUD to oversee this. But somewhere we have to get away from $1 million getting 1 or 2 houses a year. The bureaucracy is eating up the funds, and I think that's what's exciting to the tribes, is if they see it work somewhere else, then they may opt in. But it is the excitement that we saw there that we're hoping to capture in this Title VII. Maybe it works, maybe it doesn't. I'll be the first to tell you we're not sure about that. But that was our intent, no hidden intents. It was all just straight up. I yield back, Mr. Chairman.
Time of the gentleman has expired. Are there any amendments to the amendment? The question is on agreeing to the amendment. All those in favor say aye. Those opposed say nay. Nay. In the opinion of the chair, the nays appear to have it. The nays have it. The amendment is not agreed to. A recorded vote has been requested. Those in favor of a recorded vote will raise their hand and be counted. The gentleman ought to raise his own hand if he wants a recorded vote. Sufficient number having raised their hands, a recorded vote is ordered. Pursuant to subsection C5 of Rule 3 of the committee rules, the vote on this question is postponed. Pending the conclusion of votes on the floor, the committee stands in recess.